some shaky lines drawn. Pre-market buzz and the futures were on. First couple trades hit clean right out the gate. Man, I knew it was on. Couple broke traders in a Discord call, yelling this one's it, watch the candles all stacking wins, didn't think we'd fall, just riding that wave too long. And we spent what little bit of money we had on cheap commissions and a risky plan. Click, buy fast, don't think, just act. If you're lucky you can catch and run her to the top of the map, where the whole damn screen turns green like magic. Every ticker hitting nothing looking tragic. Feels like right now, even though that was 1,400 green trades ago. Spending what little bit of money we had, turned it into stacks we never had. Go load it up, let it ride like that. Don't look back, just double the stack. Where the market guys do their damage, every play hitting, yeah, we planned it. Feels like right now, even though that was 1,500 green days ago. Woke up late, but the chart still ran. Didn't even need a backup plan. Every dip got bought like clockwork, man. We couldn't lose. I ain't lose. Bet a fast mover on a low flow play. Hit a hawk, came back double same day. Turn one into 10 in a single trade. Yeah, you know that's the truth. Damn, you know it. Still spending what little bit of money we had. Now it's margin calls, we ain't scared to act. Click, buy fast, don't think, just act. If you're lucky you can catch it running through the ceiling like that, where the whole damn screen turns green like magic. Every ticker hitting nothing looking tragic. Feels like yesterday, even though that was 1,600 green days ago. Spending what little bit of money we had, turned it into stacks we ain't never had. Go load it up, let it ride like that. Don't look back, just double the stack. Where the market guys do their damage, every play hitting, yeah, we planned it. Feels like right now, even though that was 1,500 green days ago.
Oh, brother, oh, brother, oh, brother. Good morning, good morning, good morning, and welcome back to another episode of the Matt Kohrs Show, where today's a very, very special Wednesday, August the 26th, which is also National Dog Day. So to all of those of you who have a little puppo in the house, congrats to you guys, because it is National Dog Day, but potentially more important for the overall market is it's Nvidia's earnings day. I will be saying this later, but I just want you guys to know that I am by no means being dramatic or hyperbolic when I put this out there for all of you. If Nvidia does not beat today, society will collapse. The world will end. The world's largest casino will be permanently shut down. Like I said, I don't think that's dramatic at all. In fact, I think that's 100% spot on. Nvidia is reporting after the market closes today, 4:20 p.m. ET. The expected move is just above 5%. There's a lot of questions saying, hey, can Nvidia's hyperscaler play in $200 billion of investment that's going to come on the table in 2027, 2028? Is that going to pay? Is it going to pay? We're going to find out. 100% we will be finding out. Unfortunately, we're going to have a little bit of patience because we're going to have to wait till the market closes. But don't you worry. Don't you fret. There's a lot to pay attention between now and those Nvidia earnings. For example, in a mere 6 minutes, count them up, 1, 2, 3, 4, 5, 6. We're going to be getting the PCE inflation report, very important because remember what's going on in the bond market, yields, and the Jackson Hole Symposium on Friday. We're going to be getting the GDP report, once again, a strong economic measure. So we're getting big data drops, and that's going to be happening in about 5 minutes. So that's going to be setting us up for probably crazy reactions in the pre-market trading. Then from there, you're going to have not only retail traders, but a lot of larger institutional players jockeying for position throughout the day from 9:30 to 4. Then we have a little bit of a reprieve. And 20 minutes later, we're going to be getting those NVIDIA numbers. And just so you guys know, their earnings call is going to be later, but obviously the market's really going to be reacting to that initial report at 4:20 p.m. So it's going to be a big day. I know Friday, Monday, Tuesday have all had the exact same pattern of we open up decently, market sells off, we put in a base, we kind of recover, and then we go flat into close. That's been the exact same pattern for the past 3 trading days. I have a sneaky suspicion that some point between today and tomorrow, that pattern's going to break, and we're going to be figuring out what's going on. So I do appreciate you guys joining me super, super early. I know we're up before the farmers, we're up before the crack of dawn. So I just want to give you guys a little bit of a look at what's going on right now. The SPY is literally at the closing value from yesterday, so no real movement there. The Qs are slightly red. Nvidia trading at 213. It was green yesterday. It's a bit green in pre-market, practically break even. Netflix, I just want to talk about that a little later because I'm excited that I'm actually crushing a trade for once in my life. So you guys know I've been punting long on Netflix. Very excited about that play. So we are joining, I guess, the CNBC crew early this morning because in 4 minutes, we're getting the PCE inflation report. The expectation month over month is 0.2. Headline is 3.3. We're looking at the core numbers. We're also getting GDP. The expectation is 1.5%. We're also getting durable goods. The expectation is 0.4. So at 8:30, in a mere 3 minutes now, our boy Rick Santilli will be hopping on and he'll be telling us what in the world is actually happening today. Obviously, I currently have no live position. I was a good boy. I'm sitting flat. I'm not playing this. I'm trading my 18 funded accounts. All of them are up at least 2K. Some of them are even more, 3 to 4K. Just got a payout. Actually, by the way, shout out to Lucid. I just got one this morning. So on my lead account in Lucid, a nice 2K payout secured early this morning. So, hey, finally back on the old horse. So I just wanted to prep you guys up. Obviously, I do not want to miss this announcement. This will be coming out very shortly. We have about 2 minutes left. Before I turn on that volume, I just wanted to make sure we were good to go. Of course, I will throw up NQ here so we can see how wild it goes. And then if you want, I could also put SPY and QQQ. So we're going to see how things react. We're going to watch NVIDIA, Netflix. Honestly, maybe for the initial reaction, maybe we should be also looking at Bitcoin. Maybe we should also be tossing up bonds to see what's going on because there's been a lot of pressure in the bond market. So we're just going to watch this for the initial reaction. Of course, at market open, we'll switch it over to NVIDIA and then whatever's on the top of everyone's mind. But with all that being said, we have less than 2 minutes to go. So please, in chat, I want to know everyone's vibes. Are you feeling bullish? Are you feeling bearish? Are you feeling scared? Are you feeling, I have no idea what to do, so I'm not going to be playing at all? Where is everyone at? Where are you at on this day? How are you feeling about PCE, GDP, durable goods? How are you feeling about NVIDIA's earnings? Is your gut telling you to be bullish on this beautiful Wednesday, August the 26th? Or is your gut telling you to be bearish? Or are you like, no, man, I just need to call my mom and cry? Bullish, the market only goes up over the long term. I agree with that. Update on NVIDIA. I have a full breakdown of NVIDIA. Don't you guys worry. Between now and market open, you guys are going to be as prepared as the experts. I have a full breakdown on everything to look for and expect in NVIDIA. Super bullish breakout time, bearish. You guys are all over the map today. You guys are absolutely all over the map. All right, let's get the volume rocking on this. I don't know about you. All right, I want my boy Rick. They're on break. Once again, we're about to get PCE, GDP, and durable goods. That is all about to drop. And we have about 30 seconds left. You know what? I'm going to start a poll. All right. How you feeling? Bullish. All right. Bearish. All right. We're ripping a poll. Feel free to vote away. Start poll. Go. The poll is up, and we have about 15 seconds left. And I was also trying to fix some of this code on my Ninja. Let's see how this goes. All right. 2, 1. Initial reaction higher. Selling a little. We did pop. All right. Now it's giving it back. They're going through a lot of data. All right. So what were the actual results? Inflation came in perfectly at expectation, 3.3 versus 3.3, 0.2 versus 0.2. GDP also at expectations, 1.5 versus 1.5, and durable goods higher than expected. So that is the headline, and let's see if they could give us our boy Rick. So inflation at expectations. GDP at here he is. Rick's in chat. Rick's in chat.
With a litany of breaking news this morning. Personal income, durable goods, GDP, second time around the block.
All right, let's get you guys more volume. I can even see that it's low.
8:30 Eastern, and the news is hitting the wires. On GDP, second look remains at 1.5, and if we look at consumption, it improves from 3.2 to 3.4, the best pace since the third quarter of 25. If we look at the price index, 6.4, unfortunately, it moved up 0.2 from 6.2. 6.4 would be the warmest going back to the high water mark of the second quarter of June 22, and that was 9.3. Now, if we look at core PCE, a same scenario, gets warmer. 3.6 versus 3.4. 3.6 would be the warmest since 4.4 in the first quarter of this year. Now, let's look at income and spending. Personal income beats expectations by twice. We're looking for up 0.2, comes in at up 0.4. That's the best since May of this year when it was up 0.7. If we look at spending, also it's a beat, up 0.2. We're expecting 0.1. Rearview mirrors up 0.3. If we look at real spending adjusted for inflation, unchanged as expected. That does follow up 0.4. We had back-to-back 0.4. So we are coming off some pretty good numbers on real spending. Now, if we look at the personal consumption numbers, let's start out month over month, up 0.2. We're expecting up 0.1. That follows minus 0.2, minus 0.1 in the rearview mirror. If we look at year-over-year PCE, 3.7, 0.1 warmer than expected, equals where we were our last look. And if we look at core month over month, up 0.2 as expected, following an up 0.1. And now, in my opinion, the most important of the PCEs, the core PCE year over year, and that comes in at 3.3, exactly as expected and exactly as it was our last look. Let's look at durable good orders now. This is a July preliminary, which means in a couple weeks, we'll fine-tune it a bit, expecting up 0.5, double, up 1.1%. That is powerful. That is the second best of the year, and the best, of course, was a very powerful 8.5. That was in April of this year. If you strip out transportation, it still remains pretty good, but it loses a lot of wallop. We're expecting up 0.6. It comes in at up 0.4. And last month, though, a very nice revision from up 0.7 to up 1.1. Now, let's look at capital good orders, non-defense ex-air, a proxy for capital spending, a little disappointing, up 0.2. We're looking for up 0.7. However, those 0.5 we missed versus expectations show up in a revision from 1.2 all the way up to 1.7% for our last look, and that's the second best of the year outside of 3.8, and that was in March of this year. And finally, drum roll, please, we switched from orders to shipments, up 1.4, much better than expected, and a huge revision again from 2% to 2.4. These shipments are really jumped up over the last several months. How did all that affect the markets? Prior, we're at 417 on a 2-year. We're at 420. Prior on a 10, we're at 462. We're at 464. But in this instance, it's probably a bit shared with some of the PCE numbers. But it's hard to dispel the notion that part of the pop in rates is because these economic numbers on durable goods, personal income are juiced. They're better than expected. We see the pre-opening equities are still mixed, although the Dow futures, even though they're still green, they lost a little bit of their wallop. Joe, back to you.
You know, Rick, yesterday I didn't talk to you, but I was using your name. I know you read the Druckenmiller piece in the journal. Did you? And it may have been AI because it was so eloquent, but did you see the part where Druck talked about the coalescence of actual market forces that's reflected long before anyone anybody who's watching and trying to add it up in their mind? The market has done that and collated every possible thing it needs to arrive at a price, and to try and have, to move it to a different price or do something to influence it is self-defeating. The market always knows.
Absolutely. The one thing about that op-ed, and I enjoyed it as much as everyone else, but the one thing that didn't quite add up to me, Joe, tell me what you think, when he said, let the market speak for themselves. And that, of course, was going against the notion of the announcement of the buybacks. But in my opinion, if you carry that to the next step, if the market did not like the buyback announcement, if that was, quote unquote, a mistake, the market would have also spoken, and it didn't.
You mean it didn't? It did. People would say that it did initially, because after it initially looked like it was working, it reversed itself the next day, and people were quick to jump on it.
Sorry, they're wrong. They're wrong. They're wrong. I look at every chart,
Rick.
every second. It had no more intraday volatility than any economic number like a CPI, maybe a little more in the 30-year, but the 30-year is off to the races on its own anyway. The 10-year benchmark had some volatility. You look at close to close to close to close, nothing changed. As a matter of fact, the last day in July, we made the high yield close. His announcement was on the 18th. We didn't even challenge that high yield close in 10s.
So you wouldn't argue to do it, or argue that it was that it was a mistake. You wouldn't. It was just a non-event. It's only.
I don't understand. Well, listen, we can discuss whether it's a mistake from a policy standpoint, but let's be real here. Do you really think somebody of the mental caliber and trading history of Treasury Secretary Bessent didn't fully understand that announcement and a couple of billion, maybe $4 billion, maybe more, isn't really going to alter the course of interest rates? He knows that the combined intervention with the Japanese on the dollar yen, he knows it only has a certain half-life. He understands this. I think to think otherwise is childish.
I wish I had. I should always have a monitor of Steve Leisman so I can see if he's like.
He's probably fuming right now.
Jumping up and down or whatever, because I'm always hoping he disagrees with something. But let's see. For more on the data, let's bring in Steve Leisman from Jackson Hole. Allison Traeger also is a senior fellow at the Manhattan Institute. We'll talk to her. And then Jason Furman, following up with Robert Reich. We've got a cavalcade of guests today. Former chair of the Council of Economic Advisors, and he's not at Berkeley, but he's at Harvard. So we got all our bases covered. What do you think, Steve?
I'm asking the same question that Rick is posing here, which is the secretary had to know that it would be limited, but I think he did it anyway. And what his actual intention was, I think, is a little unclear. Did he think he was really going to move the long end, given the size of the intervention that he was involved in? And then we were able to report the next day that they were actually telling us that there was more to the intervention than it seemed, because they could potentially use the Treasury General account. So they upped the ante a little bit there. I do think he wants to keep a lid on rates. I take a middle ground on this with the Treasury Secretary. I think he knows he can't stop the bond market from where it wants to go, but perhaps he can make it go a little bit slower in a time of August that I think Rick would agree can be a little bit thin markets, especially when it comes to those off-the-run securities. So I think we could count on the Treasury Secretary to understand markets and somehow be persuaded by political exigencies that are out there. On the data, Joe, it really just gets to the debate at the Fed. You still have PCE inflation running above the Fed's target. And the question is, what should they do about it? The committee is divided on this. We don't necessarily know the framework of the chairman. So that's a question as to whether or not we're going to get a little bit more understanding here come Friday on his idea of how all of this works and what the Fed's role is. And is he as committed as some members on the committee to getting down to 2%, where, people have told me 2.5 is not good enough. 2.8 is not good enough. 3 is, of course, right out, as they might have said in Monty Python. So, so the question becomes, does the Fed need to clamp down on all it can do, Joe? I'm struck by that conversation you had with Jeff about what the Fed can do about oil refineries. All it can do is try to bring down aggregate demand. That is the tool that it has. And the question becomes, should it use it? I think certainly the question from here is they need to stand pat and at least watch it, with some members of the committee believing they need to do more and tighten rates.
So my 3% thing is not going to work. Okay, you didn't even mention that. All right, so we don't.
3 is right out. 3 is right out.
3 is
Joe.
right out. You're not going to do it. Okay, it's just going to go like around the whole. I'll be with you in a second, Jason. I'm going to talk to Allison first. Allison, what do you want to talk about? The numbers that we saw today, or being from the Manhattan Institute, you want to talk about the Besant twist, or whatever we want to call it, or the Druckenmiller op-ed? Where did you come down on any of that? And what did it help? Was it necessary, or should we do nothing?
Well, I mean, there's a case that there's some plumbing issues, and higher rates, might be sort of destabilizing. Although if that were true, I'd want more explanation on that. I mean, I'm also of the mind that, you can't fight the Fed, but you also can't fight the long end of the curve. It is market prices. And if you think about it, if we're really in a situation where 3% is now what inflation is, then, that's a 2% real yield on a 30-year, which isn't outrageous. This just might be where rates are, and there's not a lot we can do. And sort of any effort to sort of bring down rates is just going to be futile, or if it's effective, it's just going to be incredibly costly. And we're looking at sort of a Japan low growth situation. So I think what's interesting about this report is it's showing that inflation really might be around 3%. We don't have the deflationary forces we had in the 2010s. So if the Fed really wants to go back to 2%, that might just be really sort of doing a lot of damage to the economy that they might not be willing to do.
All right, take it away, Jason.
Yeah, I'm a little bit less worried about inflation right now. A couple of years ago, we had really hot labor markets. We had really fast wage growth. We don't have either of those right now. We do have a set of one-offs, tariffs, Iran, some prices associated with the AI build out. As I look at it all, it looks a little bit like we're at around 2.5% inflation. And then no matter what they say, you have to decide for yourself, is 2.5 good enough or not? In terms of today's data, the headlines were above expected, but I think when we see the trim mean, we're going to see that that's low yet again. The chair, rightly or wrongly, has said he is looking at that indicator. The other piece of today's report, though, is just everything's really hot. For me, real disposable personal income rising 0.4% in a month is just, this is not an economy where you need to worry about economic growth, where you need to worry about the labor market, where you need to worry about incomes. So the worry remains inflation. I'm not super worried about it, but it's the only worry I have on my list.
We did talk to Jeff Curry, and he's focused on commodities, Jason. How much commodities don't flow through eventually? I know we factor out food and energy a lot of the time, but I always get the feeling that sooner or later, if those things are in a raging bull market, corn or whatever, copper, oil, diesel, all those things, does that scare you? Or is there always got to be a wage price spiral?
I mean, first of all, oil prices have come down from their highs earlier this year. But part of why they don't pass through in a huge way is when gasoline goes up as a consumer, you have to cut back on your spending somewhere else. And so you get some direct pass through, say to airline fares, but then you get other things like maybe restaurant meals get cheaper because you're spending so much money on gasoline, you can't go to the restaurant as much. And that's why for me, rather than looking bottom up, here's 20 different prices, let's think about their dynamics, I like to think top down. What's the unemployment rate? What's wage growth? What's inflation expectations? All of those right now, to me, are sending a much milder signal than they were a couple of years ago. This is a different type of inflation today.
I would talk to everyone we have about whether they feel the same way, because you don't hear people talk about inflation like that very often, I don't think. Do you, Steve?
If you're looking at a consumer, it's the same inflation for them. It doesn't matter for them what the underlying drivers are. So This is just as unpleasant as it was. I'm just asking the question of, what's it going to be a year or two for now? And I would go with 2.5%, not 3 or 3.5% where it's running right now.
Allison, final thought.
The question.
Hold on, and then I'll get to you, Steve, because I think your green screen changed. That really does look like Jackson. Hold on, but go ahead.
The sun's coming up.
I mean, I'm with Jason in that, this, inflation might not be too bad. The problem is it's above target. And before the pandemic, it was below target. And I think that sort of throws some water on the idea that inflation targeting might be effective or credible. And if so, as the Fed sort of rethinks its toolkit and its objectives, this might be sort of part of the conversation, is that inflation might not be as sort of like a number they can just pick as people would like to think it is.
I know, that's what I want to do. All right, Steve, you want to finish to take us out and see, we can, how about 2.5? I'm setting it at 2.5 now.
That's the problem, right? I mean, Jason has decided he's going to settle. Jason is like, it's good enough at 2.5. And I think Allison, put her finger at least on the debate right there, which is that there are people on the committee for whom 2.5 is not good enough. I would quote you back the words of the chairman, who said, 2 is the target, and that's where we're going, and it's not good enough to stop at 2.5. The question becomes whether or not the Fed can do anything about this particular inflation. I have to say, Joe, not to raise the political point at the very end of the conversation, tariffs are one-off. The tariffs seem to be daily right now. We have a new tariff on this, a new tariff on that. There's a whole new set of tariffs working through the system that we're not really sure what their price impact is. Oil prices seem to go up and down based upon policies that make it very difficult to say what's happening with oil is one-off. So the Fed has to take it as it's given to them.
Right. At least up to this point, we could go back and talk to Canada tomorrow. Who knows? Anyway, our thanks to Allison, Jason. Yep.
Showing some deer.
Yeah, we do have a new panelist. Yeah. That's an interesting shot. That's an elk. What? Yeah, we got it. All right.
Yeah, we got it. All right. Yeah, we got it. I like it. I like it. What is this? Mark Walters, TWG Global Blast attacks and says no fraud amid federal probe. Don't know what's going on there. Probably not having the best day. So if you're just joining in, the reason we started early was because in terms of major macroeconomic updates, we just got a lot of stuff at 8:30 a.m. It's all on the screen right now. PCE, personal consumption expenditure, came out at expectations. GDP at expectations. That was the second read. Durable goods higher than expected. Personal income and spending higher than expected. So mixed bag in a sense that like some of the numbers were up in terms of that's a good economic read, but then as you can see in the market, not necessarily the best reaction. Heading into this announcement, the initial reaction was a push on SPY to 766, and now you can see we're down at 765. So it was going up into it, some excitement, and then there was a little bit of selling, not much, and now we've just kind of stabilized. Bonds, same thing. Bonds popped a little bit, gave it back. Bitcoin popped a little bit, gave it back. How was the 10-year yield? 10-year yield dropped and then popped. So one of those classic, like the first reaction is the wrong reaction type of a thing. Right now, the movement I would say is actually honestly a bit muted for like what we're kind of like looking at today to potentially be playing out. So for right now, I thought there was going to be more fireworks. I really did, but maybe larger market participants are waiting to see what can play out today. And I do think a lot's going to play out today, especially in anticipation of Nvidia's earnings. Nvidia will be reporting after the market closes today. So market closes at 4 p.m. Eastern. The results are going to be coming out at 4:20. And then later, I believe at 5:30, the company will be having their earnings call. But with Nvidia, a lot of the times the initial reaction, that first one at 420 is kind of the key one, because Nvidia does it in a way where they also release all of their commentary from the CFO. So a lot of people individually, but then also using AI, natural language processing and everything, are going to be ripping through that report and doing lots of trading right after market close. So I want to put that on your radar. Nvidia is reporting today. The expected move is just above 5%. And as I've already said once, and I'll say it at least one more time after this, the world is on the back of Nvidia. Nvidia is Atlas. If Nvidia doesn't break, the game's over. Society will collapse. The market will collapse. We're going to get officially into World War III. It's game over. The world's biggest casino is donezo. They're going to be buttoning up the shop, and we're all going to be kicked out. So fingers crossed that they actually do beat. Of course, prepping you guys up for today's trading session and really today as like a whole. I'll be giving you a detailed breakdown of what to look into for Nvidia, but maybe more important than that, I'm going to let you know where the large players are currently positioned. I'm putting an emphasis on currently because obviously throughout the day people are going to be trading and things could shift, but I just want to go over the expectations in terms of the fundamental numbers for the earnings, but then also kind of the math side of it, of like the expectations for the movement and where we see current live positions in the options market. On top of that, there's some news on Meta. I want to talk about Meta. There's some news on SpaceX. I want to talk about SpaceX. So those are the three equities that there's some news on this morning that I think it's important for all of us to get into. But before we talk all about that, I need to kind of break down all the numbers we just got, all those major macroeconomic reports. We got inflation, GDP, durable goods. We have some movement of what's happening in Iran. We have some movement of what's happening with the new trade war, or I should say the newest chapter in the continuing trade war between the US and China. And then I want to talk a little bit about expectations for what happens after today. And when I say after today, I'm really focusing on Friday, because not only will it be a payday Friday, but it's also going to be Jackson Hole Symposium Day, which is exactly why on that CNBC stream, they were just showing random little like elk out in Jackson Hole, because right now the financial world is paying attention to the Jackson Hole Symposium. For those of you who don't know what it is, it's where basically the Illuminati meets up and they decide what they want to do with the global markets. Oops, that's not good. They'll be deciding what they want to do with the global markets for the next year. Technically, it starts tomorrow and ends on Saturday, but the big thing, the keynote speaker is going to be Kevin Warsh speaking on Friday at 10 a.m. Eastern. So just wanted to get that all out there, kind of break it down of what to be looking for, what not to be looking for. And on that note, let's get rocking. Trump sends nuclear agreement with Saudi Arabia to Congress. The president still insists that the deal is contingent on the kingdom normalizing relations with Israel. So this is kind of a big deal, and it's in a weird sense, not weird sense, in a fortunate sense, splitting, like it's breaking in the direction that's going to favor us. So remember, in the Middle East, Israel's kind of the odd man out. Obviously, it is a Jewish country, while everyone else around it is going to be predominantly Muslim. That's like a big issue there in terms of a lot of the conflict, a lot of religious disagreement and way of life disagreement. And obviously Saudi Arabia and Iran and everything else, Oman right there, just saying everything in that region, kind of a big deal for one majority Muslim country to stop really siding with another country that's also a majority Muslim. Now, it's probably easier to split from that country from a financial sense when they start throwing missiles at you, generally not received the best. But there's a lot of like long, multi-thousand-year periods of history and stories that like kind of make this a bigger deal than I think the media and the markets and really the current conflict between the US and Iran, people talking about it, really appreciate, because this is seemingly going in the way where Saudi Arabia is saying, like, you know what? We're trying to keep up with the current progression of the rest of the world. We don't want to be left behind. And it seems as if they might be betting on the old USA horse rather than just like the local religious agreement or affiliation. So that's why it's kind of like a big deal, and we'll see how the U.S. responds with it. Iran and Oman prepare Hormuz deal as U.S. holds back on secondary sanctions. Another day has come and gone where we are told that we have a deal, and then someone else says we don't have a deal. Last night, it was reported from Russian media who somehow had insights to Pakistani media, who somehow had insights to what's happening between the U.S., Iran, and the negotiators. Like, yes, it's a very long chain of command there. But anyway, Iran and Oman prepare a Hormuz deal. Some people are saying it's good, saying it's not. U.S. holds back on secondary sanctions. Iran and Oman, remember, those are the two countries on the top side of the strait and the bottom side of the strait. It goes Iran, the Strait of Hormuz, then Oman, and then below that is Saudi Arabia. Anyway, oil prices extends decline. So on this announcement yesterday, the market didn't react in terms of the equity market. It's not like when this came out, it came out after market close. We didn't see a big pop in equities or these risk on bets, but what we did see is a pretty sizable drop in oil. And oil's been coming down. Not long ago, it was at 87 a barrel. Now it's at 8 80 a barrel. So we saw this kind of just double top rejection, like right at technical resistance. Didn't actually, I don't believe it got the gap fill, did it? What was the high here? 69. Okay, it got the gap fill to like literally the smallest increment possible. So it did technically get the gap fill, double top rejection. Honestly, a beautiful short opportunity here at 85, 88, this breakdown of the low from Friday. So if you took that, I'm not really actively trading oil right now. At one point in my life, I was a lot actively trading oil, but I haven't traded oil in a couple of years. Not, at least to my knowledge. So anyway, I see that breakdown. Now we're going from a region of resistance to an area of support. It might bounce from here. If it really sweeps 80 and keeps going, my next logical target would be 75. But remember, more exciting than the support, the resistance, the price movement in oil is I deeply believe that this is the best barometer for the tensions of what's going on in the Middle East. And the fact that we've been coming down for 2.5 days straight now and coming down a decent percentage, I'm going to take that as good news. Now, obviously, we've come down before. We've had big pops before. We've dropped, we've popped. So I'm not saying because we're dropping right now, we're going to keep dropping. I hope we do keep dropping because financially, that's better for all of us in our life. You don't want high oil prices. It's representative of tension simmering down in the Middle East. So there's many reasons why I want it to go down. Now, just because I want something, is that going to make it happen? Probably not. But I just want to show you that even the market is saying, okay, maybe we're good. But as one problem is coming down, a whole new problem is taking off. U.S. weighs more trade measures against Canada after retaliation. Let me make sure the volume's good here.
The Trump administration is discussing additional trade measures against Canada after Prime Minister Mark Carney unveiled dollar-for-dollar retaliation to new tariffs imposed by the US on Saturday. Let's go now for more to Jill Desis, our managing editor in Hong Kong. So, Jill, what could come next? What sort of retaliation for retaliation could we see in the form of tariffs here?
So, morning, Lizzie. I think that at this point, it's still pretty unclear as to what exactly the United States may be weighing at this point. What people familiar have told us, a White House official, is that they're looking at higher tariffs on Canada potentially or other trade actions. What we just saw from Canada, Mark Carney's announcement, are those dollar-for-dollar tariffs impacting some $20 billion U.S. dollars worth of U.S. goods that flow into Canada. You're looking at, I think, somewhere around 6% of overall exports that the U.S. sends to Canada there. At this point, a lot of these tariffs already cover quite a variety of industries. You're looking at increased tariffs that Canada is imposing on U.S. steel, on aluminum, on dairy products. So, you're already covering a wide variety of industries. But though this does beg the questions as to whether that is going to cover eventually an even more all-encompassing amount of goods if the United States does follow through with these retaliatory efforts here.
And Jill, we know that Carney wants to ease the impact on Canadian businesses. What have the CEOs been saying so far about the tariffs?
Yeah, Lizzie, at this point, it is, quite a tough position that, all of these companies have really been put into. I do think that what's, worth highlighting here is, the idea that Carney is putting together some type of a domestic support package. That's something that we're expecting to get some more details on. So there is that acknowledgement, at least from the Canadian government, that this is, something that is going to weigh on some of these businesses, particularly when you're looking at tariffs that are touching on steel, on autos. A lot of major businesses that ultimately do business between these two nations. I think the other thing too that's really kind of worth highlighting here is the fact that this is a prolonged trade fight that could go on for quite some time. We've reported this week that Mark Carney and his administration anticipate that this is something that may not be resolved before the U.S. midterm elections in November, and they also may be sort of settling in for something that could last through the duration of Trump's term. So I think that really does kind of underscore a lot of the pressure that these businesses are going to be put under if this is something that isn't resolved with some sort of a resolution that takes these tariffs off the table.
Maybe to put that slightly a different way, the two industries that they're really talking about, and Trump always talks about this on Truth Social, especially through the lens of what's happening with Canada, is the farmers. I'm fighting for the farmers. And did he technically lie? No, but he's also being intellectually dishonest when he's like, oh my God, they're charging our farmers 400%. You can find very, very small, niche, unique cases in which maybe one particular high-fat milk or butter product can get to 400%. But most of them are nowhere close, and most of them are not getting tariffed until certain quotas are met, and then anything past that. So did Trump technically lie? No. Is he being very much intellectually dishonest when he's putting shit out there about Canada? Yeah, obviously. So we talked about that yesterday. We don't need to really beat that dead horse, but we should talk about maybe the other industries. And if you're paying attention to automaking or specifically Detroit, there could be a problem. Canada unveils retaliatory tariffs on about 20 billion of U.S. goods. Canada announced retaliatory tariffs on 20 billion worth of U.S. goods. Ottawa said the new duties match dollar for dollar the 50% imported taxes imposed by President Donald Trump after a breakdown of U.S.-Canada trade talks. Trump lashed out at Canada, suggesting on Truth Social that the U.S. could rename Lake Ontario to Lake America. Rename it. I really don't care. But for those of you who actually maybe you're putting food on your table because of this industry, there could be implications. Detroit needs Canada more than the rest of the U.S. does. President Trump threatens escalated tariffs on vehicles imported from Canada to 50%, adding more chaos to an industry challenged by trade wars. So the automaking industry is another big one. So yes, farming is a big one. And then obviously right here, automaking is going to be a huge one. And if you think about the proximity of Detroit and the history of Detroit, no duh, is there going to be a huge, huge, huge impact. So as they just said in that Bloomberg breakdown, this might not just be done by the midterms. It doesn't seem like either side, the US or Canada, is at this moment in time really that interested in, hey, let's resolve this and let's resolve this now. They're kind of kicking back, and Canada is saying, seemingly, obviously without any special insight here, they're seemingly saying that, hey, we know you have midterms coming up, and this might be putting pressure on you guys, the Trump administration, the Republicans. So they're not really in a rush. And also, as they might be like, hey, you know what? We know Trump is going to be here for like another half of his administration. So we might just kind of let it sit. Will something happen between now and then? Yeah, for the people of the U.S. and people of Canada, I hope it does happen, because once again, it's the average just blue collar, white collar worker caught in between like the back and forth of a political pissing match. So when in doubt, you can always assume when politicians are fighting, especially different countries' politicians, it's just the average person. I deeply believe if you're left or right within the U.S. or whatever the equivalent would be in Canada, most of us have a lot more in common with each other, even if you're diametrically opposed on the political scale, than you do with these politicians. So remember that. As much as you think politicians are fighting for you, they're not. They're fighting for themselves, whether it's financial gain, power gain, a retention of said power. They want to keep their chair. They're not thinking of the average person. I deeply, deeply believe left, right in the U.S., the equivalent of left, right in Canada, they're going to find it out. It's probably going to put pressure, financial pressure on all of our lives, but then yet they're going to somehow have that political spin that, oh, no, we're doing it for you. No, don't you freak out, because we are. In fact, you should be thanking us because we are doing it for you. So as we have the craziness of Iran in the U.S., as we have the craziness of Canada in the U.S., don't forget that we're having a lot of weird issues in our own bond market. Percent bounce starts to emerge in long bond market metrics. So it was just last week that Percent said, hey, the U.S. government, the Treasury, could buy a bunch of longer dated bonds. Do longer dated bonds matter that much? Not really. A lot more people care about the 10-year and the 2-year. Those are the important ones. What are those bond prices? More importantly, what are those yields? If you are running a business in America, you really care about the 10-year year. That's like the main thing in the bond market you're probably paying attention to. So as much as he's saying, hey, we're going to support longer duration bonds like the 30-year, these announcements do have an impact on the earlier part of the tail and earlier part of the curve, I should actually say. And for a little bit there, I mean, we can directly see what his comments did right here. So we got this nice pop. Like, things were horrible on Tuesday. He talks about it on Wednesday. We pop up. Things are looking good. Then the market says, we don't really believe you. And then all of a sudden they're saying, we kind of believe you. But then you can see this morning they're saying, we're kind of not really back to believing you. So it's kind of all over the map. And another way you can see this is, like I said, the 10-year. If you're on TradingView, just US 10Y, you can see that the yields were ripping. That's not a good thing. And then you can see they started to take a hit on Wednesday. The market said, we don't really believe you, Bissett. And then they said, we kind of believe you. But then fast forward to this morning, they're like, maybe we don't believe you. So the market is really trying to figure out how serious he is. Is he just posturing? Got a little bit more funky yesterday. We covered the Stanley Druckenmiller story where he is the mentor of Bassett. And he's like, yeah, I don't really agree with this. But once again, does Bassett believe it, or does he just have to say it and then maybe it's a self-fulfilling prophecy and the market will buy it? Obviously, time will tell. It's more dramatic than this headline. Like, what's going on? Remember, the bond market is like considerably larger than the equity market. So like maybe I need to zoom out to really show you guys how big of a deal this is. Like, bonds have just been like, appreciate what is happening in bonds. Ever since 2020, ever since Jerome Powell and the first Trump administration said, okay, we got to help you guys out. This Rona period is crazy. The 20-year bonds were trading at 170. We're down at 83. Like, this isn't just an issue over the past week or month. This has been an issue for the past better part of a decade, better part of 6 years now. And I get it. It was crazy when they had to start printing all that money and we're debasing the dollar. Like, I get it. The issue is when it started to recover at the end of 21 and then it didn't, and it cracked in mid 22. And now we're coming up to these dangerous levels where we were in May, where we were in October. We're getting at dangerous levels where people are starting to say, dude, what is this weekly chart? I mean, the weekly chart going back to 2002, we're at levels that maybe we haven't seen. So like, as much as like, we're reading little silly articles like this of like, okay, what's happening in bonds? Is it serious or is it not? Like, I don't think I'm even doing a good enough job to explain how serious this is. This is as far back of the data that I have goes to 2002, and we're like right at that low. Like, the craziness of post.com, the craziness of 08, 09, like, we're cracking some of these levels that you don't want to be there. And this is what happens when you have pretty crazy monetary policy decisions. So as much as we're kind of looking at it of like, oh, it's kind of trending down. When I always say when in doubt, zoom out. When you do the whole when in doubt, zoom out with bonds, you're like, oh, wow, this problem is actually way worse than I actually thought it could be. So hopefully, just hopefully, this part is true. Massive bets on bond rally dominate options market. Hopefully, that's not only true. Hopefully, these players know what they're doing. Who is buying America's debt these days? I thought this was kind of a useful breakdown because I know we talk about bonds and yields, but we quickly forget about it because we feel like YOLOing SPX 0 DTEs. And we're like, okay, yeah, whatever, kid on the camera. You're talking about bonds. I don't give a shit. I'm taking my kid to school. My manager won't stop yelling at me. I just want my random, AMC calls to pay. Like, I get that you guys, some of you guys are there. But I think to understand how interconnected this is and potentially how big of a deal this is, I thought this was actually a pretty solid breakdown to understand. Because remember what bonds are. That is just the government saying, hey, we're going to sell you something. You give us money now, and we're going to give you your money back and a little bit more in the future. So it's how we are funding the government, especially when we're continually running at a deficit. You know how the whole debt thing, we're up at 40 trillion. It's because of this, folks. Like, it is a massive, massive deal.
The U.S. Treasury has just sold $25 billion of 30-year bonds at a yield of 5.216%. That's the highest rate the government's paid on 30-year debt since 2001.
That effectively means the interest rate which the US taxpayer pays the bondholders has soared massively in the last few years. The reason everyone should care is because government bond yields determine the value of equities, corporate debt, and even mortgages.
Let's be clear, America can still sell its debt. The vital question is who's buying it and what it now costs to keep them at the table. The U.S. national debt passed $40 trillion this year.
Hell yeah.
That's an issue for Treasury Secretary Scott Bessent because it means he needs to issue more and more bonds to refinance maturing debt.
Older bonds mature constantly. That puts the Treasury back in front of investors month after month, whatever the prevailing rate happens to be. For most of the last 2 decades, that dependence cost very little.
Interest rates in the US and globally were depressed. As inflation has surged back after the pandemic, we've seen government borrowing costs the world over rise.
Bond prices and yields move in opposite directions. As investors sold their bonds, the government's cost of borrowing climbed. More recently, that expense climbed furthest at the long end of the market, where lenders are committing cash for 30 years.
The reason that interest rate was so high is because borrowing over the long term carries extra risk for investors, and therefore they're demanding more and more compensation to adjust for those risks.
For decades, the Treasury market could rely on a fairly dependable group to buy these bonds: the Federal Reserve, foreign central banks, and long-term institutional investors, including pension funds. That base is changing.
As the amount of government debt has increased in recent years, they're becoming increasingly reliant on hedge funds, who are more likely to buy and sell over a shorter period of time.
A central bank can buy treasuries for reasons that have almost nothing to do with the return, and can keep buying even when the price moves against it. A hedge fund is much more price sensitive. It may often just leave. One group should, in theory, be filling that gap.
For decades, pensions would seek long-dated government bonds to match against their liabilities in the so-called defined benefit payment system. That means they promise pension members a certain payout when they retire. But in recent years, pensions have been moving towards a new system, which is instead based on market returns. Since governments can't rely on that same demand from pension funds, they have to seek investors at different maturities, such as money market funds, which will only lend their capital for up to a year.
So, at the very moment governments need investors willing to commit for decades, one of the few natural sources of that demand is becoming less dependable, and the long end of the market is left to buyers who are more price sensitive and more willing to walk away. This August, Treasury Secretary Scott Bessent changed tack.
Bessent is doing things which are unpredictable and changing the rules of the game.
He announced the government would increase buybacks of long-dated government bonds by financing shorter maturity debt, providing what the Treasury called greater liquidity support to the market. But it didn't immediately solve the problem.
A concern among bond investors is that if the Treasury becomes more unpredictable, they might start needing to demand a higher compensation for that uncertainty.
None of this would matter if it wasn't for this.
US government bonds are the center of the financial universe. They're used to price everything from the rates on corporate loans to equity valuations. Crucially, they're also a key determinant of mortgage costs.
The same repricing reaches landlords refinancing buildings, developers deciding whether a project still makes sense, and companies rolling over debt they took on when money was cheap. It reaches the government itself as well.
In August, US interest payments to bondholders hit a record $85 billion.
The United States now spends more servicing its debt than it spends on defense.
The main takeaway is interest rates will remain higher for.
Wait, just one more time for the people who weren't listening. As of this year, we now, as a country, spend more on our debt interest payments than we do on our defense. The U.S. military, you know, that thing that is like kind of infamous for how much money we spend on it. We spend more just on our debt payments, our debt covenants, than we do on our defense. Not bueno.
Longer for governments, consumers, and corporates around the world.
Well, there's the end there. It's like I said, I know a lot of us here, myself included, we're mainly watching equities, but when you appreciate this downfall in bonds, when you appreciate this gigantic pop in yields, you kind of realize, holy shit, like that's not a good direction at all. Now, a lot of people think that the current level is we can come back from it. I don't want to be here like super doomsday, but the current pathway, if we continually keep having administrations that are ballooning the debt, increasing the deficit, it's not going to be good. It's not going to be good. And I get it that there's some like probably tree hugging libtards in here who like, this is why we gotta tax the billionaires. They gotta pay their fair share. I want you to, if you could, go take your little crybaby tears and put one of those tears into whatever your closest ocean is, whether the Atlantic or the Pacific, and understand that that is what would happen. That is the impact of let's properly tax the billionaires. That's how much it would assist our problem. We are running at debt of 40 trillion. Do you understand how much 40 trillion is bigger than the biggest tax payment ever of 10 billion from Elon Musk a couple of years ago when he had to buy Twitter? 10 billion is less, like it's mathematically, it's less than a tear in the entire ocean when you're running at a total debt of 40 trillion and you're running at a deficit of what, 1.5 to 2 trillion. We're just like, we're in an entirely, like it's a whole different word, folks. We're going from million to billion and billion to trillion. And then we have many of those trillions not running in the right direction. So this idea of like, oh, we just need to somehow go to the rich people in the US and like they're going to help us solve it. No, it's a government problem. Our government spends too much. It is incredibly too inefficient, and that's the real problem. So until we have someone get elected to office that is serious about it, and then from there, it can't just be one administration. It has to be a succession of administrations and like a full-fledged effort from the U.S. government to be like, this path is unsustainable. We got to fix the path, and then we got to fix the magnitude of the number. It's just, it's not good. It's very much not good. All right, now let's get back to today specifically. Now that I'm a little bit of a Debbie Downer, let's talk about the cool, good things, such as the fact that, maybe just don't give a shit that our world is this the right one? This is not the right one. Maybe just don't worry about it because, hey, if you're in assets, obviously as things inflate, you look richer on paper. That doesn't mean your spending power is better. Do you know how much you have to make right now to have the same purchasing power as your parents? I grew up in the 90s. I was born in 94. I just looked this up yesterday, the day before. If your parents made $100,000 in the 90s, the equivalent purchasing power now, like what you would have to be making to be at the same purchasing power as your parents now, is just south of 250,000. It's around 230, 240. Do you guys not realize how crazy that is? Like, the sad thing is right now, I know many people don't make six figures, but if you're making six figures now, like on a relative basis to the 90s, like you're actually struggling. Like there's like a real financial struggle. 100,000 in the 90s, if that was your income, that's how people could live off of one income household. You're like, okay, you had a good career job, you were there for 10 to 20 years, you went up the ladder, and in the 90s, early 2000s, yeah, you're making 100, 150. Now that equivalent is around 2 to 250. Like, isn't that fucking crazy? Isn't that absolutely insane? It blew my mind. Maybe you guys don't find it as nuts as I do, but it blew my mind. Anyway, let's maybe focus on the good. Let's focus on the fact that the market's at an all-time high, and if Nvidia beats today, maybe we're going to see even more record highs. Just so you guys know, we did get inflation, GDP, and durable goods all this morning. Crude oil inventories will be coming out at 10:30. And then obviously after the market closes, we're going to be hearing from Nvidia. Tomorrow, we have initial jobless claims. Friday, we do get Chicago PMI. It's important. I'm not saying it's not important. It's a little boring. Who cares? But the big thing is at 10 a.m., we're going to be hearing from Kevin Warsh at the Jackson Hole Symposium. Once again, that is Friday, August the 28th. The Fed chairman is heading to Jackson Hole without a clear stance on inflation. Kevin Warsh has kept his views on interest rate close to the vest. He's not doing the dot plot. He's not really sharing his opinions publicly. It's a really strange play, and it's probably not helping the generic unease in the bond market, leaving investors and Fed officials to guess how he plans to tackle inflation. So Kevin Warsh, this will be his first Jackson Hole experience. We all remember our first experience with Jackson Hole, and I'm excited for Kevin to get his first experience with Jackson's Hole. Anyway, this is probably going to be setting up quite a bit of the bet on the Fed decision in September. There's no FOMC meeting. There's no Fed decision in the month of August. It is in September. And as of now, there's a 2/3 shot, a 66% chance that we will stay at the 3.5% we're currently at. So 66% chance. A little bit ago, rewinding to early August, there was a chance of a rate hike. That's probably not going to be happening, and the odds right now are we're probably going flat. Just so you guys know, we're going to have a really fun day at Jackson's Hole because Kevin Warsh, we're going to be able to bet on all the things he does or doesn't say. So we're going to have a fun time with that. Shout out to Kalshi. We will be doing that. So once again, Friday morning at 10 a.m. Between now and then, we have the very exciting earnings report of CrowdStrike, Salesforce, and Nvidia, and I really want to get into Nvidia. This is the expectation. We will be getting the result after market closes, 4:20 p.m. Eastern, LOL. The estimated revenue is estimated revenue for the Q2 is $92.2 billion. EPS, $2.09. That's your top and bottom line. But of course, a lot of people are going to be diving deep, not only into the data center and what is actually happening there, which the revenue source, that's about 90% of it. But there's a lot of questions of what's going on with Nvidia and basically them being the banker for most major hyperscalers. Will that pay off? Nvidia's dependence on hyperscalers faces big test in the earnings report. No shit, Sherlock. Nvidia's $200 billion risk is in focus. Wall Street is looking beyond Nvidia's expected blockbuster Q2 earnings to a potential $200 billion in AI-related credit exposure by 2028. That's a lot. So right now, Nvidia, as I just said, is functioning as the banker. This is a high-risk, high-reward play. It's either going to pay off, and before you know it, Nvidia extends its distance as the #1 company in the world, or all of a sudden, if there's too much risk and the market takes a downturn, this could really be large problems. Investors want clarity on Nvidia's off-balance sheet commitments tied to AI infrastructure financing, supply, and power. Despite these concerns, Q2 revenue is expected to nearly double. Nvidia, a $5 trillion company, a company that has not missed earnings expectations, and not the past 1, 2, or 3 quarters, in the past 12 quarters. Folks, it's been 3 years. I was a young man. I was in my 20s. I had life ahead of me. I still had a little fucking glimmer in my eye the last time Nvidia did not beat on earnings. Now, it's beat on earnings. That doesn't mean the stock's always gone up, but it has beat on 12 consecutive earnings, top and bottom line, in a row. And the question is this lucky number 13? We're going to find out. I have no special prediction. My only prediction is the expected move is 5%. I think it's smart to sell puts 5% below. I would not only be leaning on the bullish side, but the way I play it would not be via calls. It would be by selling puts 5% below. So even if I'm wrong and the stock drops a little bit, there's still a chance of me being right on that play. So that's going to be the main thing, is kind of what's happening with the CapEx and them being the bankers of said CapEx. Here's what Bloomberg thinks you should be listening to.
Micro is now macro. That's how big this AI company spending has gotten to. So,
side note, you heard that right, gentlemen. Micro is now macro. So as maybe bad of a day as you might have been having, or maybe if you lose a lot of money, I just want you to know, Bloomberg has reported it. It wasn't me. It wasn't AI. It wasn't The Onion. Micro is now macro. Congrats.
one thing that we're paying attention to is CapEx kind of trajectory. I'm not just talking about Nvidia. I'm talking about the whole AI complex. Already beginning of the year, it was record level, and it has been revised higher. And higher CapEx also means competition for capital is intensifying, and that pushes rates higher as well. We're in a higher rate environment, but on the flip side of that, durable income becomes a more important theme for portfolio, which we're very excited about. But back to equities, Mag 7, we just talked about the S&P 500 trading at below 20 times. Mag 7 forward PE is just above 23 times, which is close to a 3-year low at the moment, mostly because of there has been a bit of consolidation, rotation, but also strength of earnings. So within the broader AI ecosystem, there is a sub-theme, which is scarcity sellers are doing quite a bit better than scarcity buyers, and Nvidia is scarcity seller. You look at some of the price increase that we have been talking about, it really does show that they have earnings pricing power, earnings momentum, and that's something that we are very excited about.
That's really interesting. So you see that as a pricing power story for Nvidia, not a concern about margin squeeze on higher memory. You're more, the read you take from that is they have pricing power. They can do this and do it comfortably.
Well, there is the whole AI ecosystem, and pricing dynamics very much kind of shifts where revenue is accruing. So there is pricing power. Memory prices are also going higher, and I would also think of memory providers as scarcity sellers too. So if you think about them as kind of players within the whole ecosystem, sellers better than buyers in this particular case, and the models have a role to play within the overall ecosystem as well, because we talked about how valuations look attractive, but earnings durability very much at this point divides AI bulls from AI bears. And as we think about kind of the commoditization risk from China, it impacts models, and specifically we just talked about some of the pricing dynamics. It's happening within model providers too. You look at leading model labs in the the US OpenAI, for example, you see that the less advanced models are more kind of facing the pressure of commoditization, whereas the very leading edge models, they still command pricing power. And that is important, which is why they're throwing everything at it to try to lead in the frontier race, right? So the bottom line is we're still positive, the AI trade, because momentum is very strong, CapEx is strong, your CapEx is my revenue, so things are going up. But we're paying attention to model development to understand the progress of technology. We're paying attention to GPU rental prices to understand demand. We're also paying attention to incremental margin in particular to understand monetization trends.
Market just got a nice pop 5 minutes to go till market open. So once again, Nvidia, that's what I'm looking for. That's what some of the, I guess, fancy pants people at, what was it, BlackRock, that's what they're looking for. Before we get to SpaceX, I do want to show you some expectations. Remember, these are Nvidia's, this is the stats on Nvidia right now. This is the options market. The yellow stands for call open interest, not necessarily who is long and who is short, because remember, it's a single dealer market most of the time. The blue is put. So you can see there's a spike of call open interest at 2:30. And then if you want to kind of do that breakdown of like what's happening overnight, once again, larger interest here at 2:30. And you can then see, hang on, why is this not loading for Nvidia? I was looking at it this morning. I don't know why it's not loading right now. I'm trying to reload it. You're going to have to take my word for it. It was a bunch of call selling at 2:30. But then what I thought was interesting, if you look in early September, we actually had call buying for 2:30. So they might be doing some sort of like calendar spread. That's possible. But looking at the recent options action, now, maybe these players know what they're talking about. Maybe they do. Maybe they don't. That would be your opinion on, are these large traders smart and informed? I just want to let you know, a lot of action at the 2:30 strike, and it is specifically call selling. So adding a little bit of positive gamma, about $10 above where we are. But remember, the expected move is in the realm of 5%. So the earnings reaction, they're looking for a 5% move. Moving on, SpaceX plans to build a $100 billion spaceport in Louisiana. So SPCX making some moves. Meta states have discussed settling a teen social media case. And actually, I saw you guys in chat. This was being received pretty well, that Meta, a nice pop up of about 4% in pre-market trading here. I was actually really close to getting long calls, leap calls on Meta yesterday. I wish I did, but there was no way to really predict this.
Bloomberg understands that Meta and state attorneys general have discussed a possible mid-trial settlement over accusations that Facebook and Instagram were deliberately designed to addict teenagers. The trial is now in its second week in federal court in Oakland, California. And we can get more now with Balash Pence, Bloomberg's deputy managing editor, also in Hong Kong. Balash, just tell us what we know about this potential settlement.
Well, we don't know a lot, but it is a major development in this case that our colleagues are able to report that the two sides are talking about a potential settlement. We don't know a lot about the details, but there's one thing we can be sure about, Lizzie, that it would be for a lot less than the $1.4 trillion that was flagged as the sort of upper limit of a potential penalty on Meta here. Another area that the two sides might be discussing is the potential changes that might be required to the algorithm, to the software, the very heart of this case, which the states allege that Meta used to get teenagers and young people hooked on its products. And Meta has already said that they expect some of the changes that might be required would be unreasonable. So it stands to reason that that's something that they could also be discussing in these negotiations.
So basically, the TLDR is maybe they're coming to an agreement early, not going to continue with the case, pay probably some sort of fine, and move on with their life. Obviously, as you can see, the stock market is reacting very well, or the equity price for Meta gaining 2% yesterday, up another 3.8. For a while, I was yelling that rum is undervalued. I was right. $5 to now 10. For a while, I was screaming, I'm going to get into Netflix, and I did, and we're looking pretty good. liking that one. I was screaming it for Microsoft. That was another one that I was telling you guys, I'm loading up as much as I can around 400. We're now trading at 488. Meta is the final one that I've been screaming it for a while, and I very deeply believe eventually this goes. It's been a very, very rocky path for pretty much this entire year, actually even going back into November of 2025. Eventually, this overall downtrend, I do believe it breaks and it rips as it figures out this court case, as it figures out really how to position itself in AI. So right now, I have no short-term plays on it, but it is a decent position in my long-term portfolio, and I keep adding on these dips. And honestly, I'm liking this triple, quadruple dip situation, and I want to see a push back up to 680 and ideally a breakout from there. So before the market opens on the day, we have 1 minute to go. As much as things are seemingly good going in today, Jim Cramer says, I sense a monumental day. And then before you know it, the retail community is like, hey, man, could you please for once shut your pie hole? So is Cramer going to ruin all this for us? Potentially, but let's sit back and find out.
Dingity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly. And if not, have fun.
All right, I'm going to be doing everything I can to just kind of chillax, see how it plays out. I am still in that Netflix play. I'm up about 45%. Let me close out that program. I want to see how many programs I can close out just because I don't want my system getting too hot. You know, we don't want to run it too hot today. We will... Let me show you options flow. Personally, I don't think it's that valuable right out of the gate. Let's just, oh, hang on. No, I just want to go back to my hero. And then I also need to, hang on, the hero data. Is this my computer? I notice things are being a little bit slow. All right, it's not populating. Uh-oh, we don't know the flow. We're going dark, Batman. But this is working. I do want to point out there is positive gamma below, negative gamma above. That is generally constructive for the bulls because it means if you dip, you have the market makers coming in as a natural buyer with a very large positive negative or a positive gamma node at 7655. Big support at 765. And then you have negative gamma kind of all the way up to in excess of 7,700. So just my initial thought, 1 minute into the day, the current options positioning where we see negative gamma, where we see positive gamma and how it's structured, I think the bulls do have the upper hand. I know right now momentum's a little questionable. 1 minute is bearish, trying to break. 5 minute is bearish. 10 minute is bearish. 30 minute is bearish. Looking at the NASDAQ, it's already breaking. Was bearish, getting a huge pop. Was bearish, getting... So right now, the NASDAQ is attempting to lead us higher. So I'm going to be here for it. We're seeing our first major test of the day on the Qs. This is the classic red to green. That white horizontal line in the bottom left of your screen is the white one, is the closing value. So above it, we're green on the day. Below it, we're red on the day. That was the closing value from yesterday. Obviously, we're paying attention to Meta and we're paying attention to Nvidia. Meta, big news coming out of the court case. And I think I really deeply believe this is a solid medium to long-term investment. And then, of course, we're watching Nvidia because it is Nvidia's earnings day. And speaking of Nvidia's earnings, the expected move is 5%. So just wanted to quickly show you. Here's my accounts. I was a good boy. I did not trade early today. I wanted to be as patient as I possibly could. Also, side note, you guys pointed out that when I switched over from trading NQ to MNQ, that the position and the average fill was not properly updating. It was showing it on the chart, but it wasn't showing here. So I did make my little coding slave Claude update that for me. So I'm hoping that this is better fixed. And then also speaking of that, you're going to notice that one of my accounts is less than it was. My one Lucid account yesterday when I left you, it was at 56,000. It's now at 54. And the reason it is down $2,000 is because I was approved for a payout. So my first payout my second payout in the month of August. So it's a small one, but hey, $2,000 a day keeps the doctor away. So by no means am I going to be complaining about that. So nice little 2K payout from Lucid on that main Lucid account. And I'm not that far away from getting payouts on some of these other accounts. So I'm going to just kind of do what I've been doing, size down, play the key levels, really try not to chase and see how it goes, which actually leads me to a big one today. If you guys missed it, MFF, not only am I their newest affiliate, and obviously code Goonie will never get you the best deal, they dropped these new accounts, rapid end of day drawdown, awesome, daily payouts, awesome, 90-10 split, awesome. That combination, the end of day, the daily payouts, and the 90-10 split, please correct me if I'm wrong, I do not believe any other firm has that combo of three. And what's cool is just yesterday it was 20% off. Now it's 50. So it's a really, really, really good deal. If you thought, hey, I wanted to try MFF, or if you wanted to buy more accounts, this is the time to do it because the discount just went from 20 to 50. And obviously, if you want to take advantage of that, use code Goonie. And personally, I am taking advantage of it right here. Here's my 3 funded accounts on MFF. They're all up just a hair below $2,000. So before you know it, as soon as I max out the buffer, that's when I'm going to start feeling a bit more comfortable with taking my own daily payout. So just want you guys to know, the more of you who sign up for it, the greater the chance that I'll be able to give away some of these freebie accounts on Friday for Payday Friday. Obviously, since I'm a new affiliate of theirs, they want to see how the numbers are. So if you're looking to buy one today, use that code Goonie. It's going to pay dividends for our community in the future. If you're looking to test them out, if you're looking to get more, like I said, 50% off. Just yesterday it was 20% off. So it's very, very affordable. I like the 50K rapid EOD accounts. Those are my favorite, but obviously use what you think is best. So shout out to MFF, use that code Goonie. And if enough of you sign up, we're going to be doing the Payday Friday with them, obviously giving away their accounts, but also a little bit of a specialty thing because they have like this loyalty reward system that I'm excited to kind of test out. And I have some cards and I want to open that live with all of you. So shout out to MFF. On that note, market popped, clearly rejected at that red to green move. That's a classic reaction. Meta taking a hit. You have Nvidia taking a hit. Let's get rid of this. I'm trying to just continue to clean things up. Mag 7 kind of flat, a little bit down. NASDAQ is actually kind of up. And then the S&P 500 is kind of up. So right now, granted, it's only 5 minutes worth of data. The options market, basically, are we going to find support at the opening value? 1 minute tried to get going. 5 minute tried to get going. Trend minute, like huge wick got knocked. 30-minute huge wick got knocked. So big wick on the 5, big wick on the, it's basically, are we going to switch momentum? The 1 minute momentum already switched. Awesome. That's great. Can it get going? But the 5 and the 10 were bearish as of market open and really flipped at 8:30 after the PCE, GDP, and durable goods orders came out. But now from here, is it going to get going, or is this little first 2 minutes a little bit of a fake out? I want to see if support is created maybe at the 50 EMA. On ES, is it created, or here, maybe I could show you on SPX. Is support going to be found at the current intraday low? I would love for SPX to find support at the 65 level, where once again, that is a very large positive gamma. And can it get going from there? That's the question. That's the question. That's the question. What time is it? 36. I kind of like this setup for going long, but I'm not going to because it's a little too early. And what you're seeing is allegedly the new and improved discipline mat, but there is a lot of me that says rip this long, brother. There's a lot of me that thinks rip this long. I'm not going to, because like I said, I'm trying to be the new and improved discipline trading mat. Oh man, I want this so bad. I just want to rip it. I want to rip it. I want to rip it. I want to rip it. But it's too early. I got to stick to my rules. And it's when I don't stick to my rules that it ends up costing me a lot of money. So on that note of just trying to secure more payouts, I'm going to do everything in my power to, man, I want it. I want it. I want it. But hey, maybe my discipline is good because I said I wanted it at 60. So obviously I didn't take the trade. Clearly, you guys would see it. You guys would hear it. But I'm curious if this would or would not pay. I'm curious if it'll actually get the break above 280. I'm curious. Where's my 10 minutes? Did I mark out the high and the low? Okay, I did. So the pre-market, the extended hours trading, the high is 309 and the low is 29,096. So pretty a 200-ish, 200 and change point differential between those two. That's a pretty sizable range. I mean, look at what happened between futures market open and 10 p.m. ish. That was a pretty big waterfall. Rebounds, resistance, resistance, resistance. There's very evident resistance at 280. So maybe it was good I didn't chase it there, because going long at resistance, generally not the smartest move, because it's a clear, I mean, between 280 and 310, you have massive resistance. We saw it yesterday in the trading session, pretty evident. We saw it in post-market trading, pre-market trading, 280, 280, 280, rejection, rejection, rejection. So this is why I try to be disciplined. I mean, it'd be one thing if you did it out of the gate, but to go long at 260 was when I was looking at it. 260. I was thinking about it right here at 260 when there's resistance at 280. It's just not a good play. Going long at resistance, where resistance is very close and your support is all the way down at 200, it's just not a quality play. And like I said, I was really close to ripping that, and I'm happy I didn't, just because the disciplined move was to not do it. The disciplined move is to wait for the breakout, then wait for the retest, ensure that resistance has become support, and then play it off of that. That, in my book, is what the most shrewd, the smartest risk managing traders would do. Now, you might agree with that, you might disagree with that, and maybe you did rip it. And if you rip it, I'm not rooting against you. I want you to get money. The only time I don't want you to get money is when your trade is perfectly the opposite of mine. Obviously, I'm always going to root for my account over your account. But if I'm not in a play, or if there's a way where maybe we could both make money, yeah, I'm not rooting against any of you. LOL, Meta scolded, getting slaughtered. Meta, it's given some of that back. I mean, remember, Meta's big move is on the murmurs, if you will, of maybe the court case is going to be ended earlier and they're going to come to some sort of agreement. Maybe. All right. Obviously, we're watching NVIDIA. If you're just joining in right now, a couple important things. Number one, if you guys haven't done this already, whether you're watching on Rumble or YouTube, if you guys could do me a huge favor and hit that like button, maybe say something in chat. Don't forget to subscribe. When you guys have more engagement, that does help me out. It tells the AI algorithms that run my life to present this show to more and more people. So if you want to hit that like, say hi to your friend, or even send the link to someone to get them to watch the show, all that type of engagement, any engagement, I and the rest of the team truly appreciate it. So thank you for that. If you're just joining in right now, about an hour and 10 minutes ago, we got the PCE report. The next major inflation report came out at expectations. We got the GDP, came out at expectations. It was the second rating for Q2. And then we got, what was it? Durable goods higher than expectations. Personal income and personal spending were also higher than expectations. Later on today, we have NVIDIA's earnings. Those numbers come out right after market close. Market closes at 4 p.m. The NVIDIA numbers come out at 4:20. So basically 20 minutes after market close. The expectations is almost 100% growth in revenue. The EPS is also another large jump. So the expectations are sky high. If NVIDIA smashes said expectations, yes, I would be looking for the market, especially the NASDAQ, to be back in that realm of all-time highs. If it misses, and remember, the expected move is plus or minus 5%. So whatever we close at today, you can plus and minus 5%, which at the current values is what, 5%? So that's about $10, roughly, a little bit more than $10. That is the range that the options market is currently thinking we could go, roughly plus or minus about $10. $10 and some change. So those are the expectations. I don't like playing earnings. Earnings, I think, is nothing more than a degenerate crapshoot. If you want to play earnings, mathematically, the best way to do it is to do it by selling premium. If you're bearish, sell calls. If you're bullish, sell puts. Why this is advantageous is if you want to represent a directional opinion, yeah, whatever, have at it. I wish you the best of luck. But why it's beneficial is if it goes sideways, you still get paid. If it goes against you, but just not that much against you, you could still get paid. And it's all because of the phenomena of basically the realized vol. The realized vol is commonly below the implied vol. So what you might have heard the term of volatility crush. Going into big events such as earnings, volatility gets juiced up because people get these expectations. And then commonly those expectations are quite a bit less than what we actually see. The SPY is coming up to its own red to green test, while the Qs pop for the first 2 minutes, and now we're just going sideways doing nothing. We're getting lower highs and higher lows. So by definition, consolidation. Hang on. And we just ran into that first test area. Remember, I kind of care about this zone. This is my first test. Like, this is resistance. No matter how you chop it up, this is resistance. The question is, can it actually get above it? Here, let me draw it a little bit lower because we had all these wicks, wick city. Let's draw this out a little bit. Obviously, we've established some level of support in this zone as well. So we had a thus far today, and granted, we're only 14 minutes into the day. One area of support, one area of resistance. We're trying to break the resistance as we speak. Yes, I was interested in going long at 260. I thought it was a bit degenerate. It did come back to 22, so I would like it's working out now, but I would have had to withstand a 40-point hit, which is not the highest quality play in my book. Especially so early in the day where maybe a random thing could happen. But like I said, I hate chasing these breakouts. If you're going to chase a breakout, it's actually better to chase a breakdown. Or no, excuse me. I got that backwards. It's better to chase a breakout. It's worse to chase a breakdown. If you have an established high and you have established low, I've researched this like ad nauseum. Like, you guys would be like, Matt, you're a little autistic. The fact that you looked that up so much. If you have an established high and if you have an established low, chasing them in a general sense is not a high quality play. But let's say you're a degen and you really want to chase it. It is most likely to be less punishing to chase a breakout than it is a breakdown. Another way to put that is there are more fake out breakdowns than there are fake out breakouts. So if you're a person, you're like, nope, I just like to do quick little scalps. It is more advantageous to do it on the bullish side than the bearish side. And it's just the current people who participate in the markets, they just trade in a way where on those fake out breakdowns, there's a lot more buyers stepping in than there are sellers stepping in on the fake out breakouts. So just want to put that out there. Chasing in a general sense is not a thing that I can ever like be supportive of. Yes, there are strategies that you can make work, but I just, in a general sense, I don't think it's good. There are maybe some shrewd adept players in here. You're like, no, man, this is what I do. I do it all the time and I have the stats to back it up. Congrats. Awesome. Don't let me get in your way. But remember, I'm not just talking to you individually. I'm talking to the whole community. And in a general sense, chasing a breakout, chasing a breakdown is not a smart idea. If you're looking for a breakout breakdown strategy, generally it's going to be better if you do it on the bullish side. But if for some reason you're like, no, I like to chase breakdowns, don't let me stop you. I'm just letting you know that is a more difficult trading system to pull off than the opposite is. But once again, when we're talking here, remember a lot of the times we have to speak in a general sense because there's thousands of you watching and you might be like in your own unique individual case where you're like, yeah, but I was able to get like XYZ to work. Okay, if you got it to work and you have the data to back it up and you're doing it with proper risk management, please do not let me get in your way. If you're like, dude, hey, I have a proven track record. I have the system. It's mechanical. I've researched it. Don't let me get in your way. Let me get in your way if you're like just doing it off of vibes. If you're like, no, I feel like I saw this a little bit, so I'm going to start trading it. If you're just trading it off as something that you like anecdotally have evidence of and you haven't really done the research or extensive back testing, you're probably asking for a lot of trouble. You're most likely asking for a lot of trouble. And look at that. We ran right into resistance, right where I predicted we would run into resistance. It's funny how that works, huh? Maybe I just got lucky. Probably just got lucky. Bless you, Matt. No, bless you. No. How about you take that and bless you? How about that? How about that? SPX has just been going sideways on the daily. SPX on the intraday popped above the red to green, got all the way up to the high from yesterday, taking a little bit of a hit. I honestly wouldn't hate this retest. I would not hate this retest in the slightest. A little retest of 75, 76, 77, maybe a little bit of an overshoot, and then pow, all the way up to 686, and then we rip it I would, like I said, we have negative gamma up. I said it right at market open. I think the general option setup favors the bulls a bit more just because we have negative gamma above. So if we get going, the market makers are going to keep buying. While we had positive gamma below, if we dip, the market makers are going to buy in terms of support. That's what positive gamma is. It is mean reversion, while negative gamma is more of slippery price action. It is more of trend following. So I do believe we have a shot, maybe a hiccup at 90, but I'm really looking for that test of actually just above 7,700. If I were to look at this really, I mean, 77 to 715, like this is where I see if we keep getting that drift to the upside, that slow bullish grind to the upside, I'd be looking up here. The spot gamma implied one-day move high, 7715. So maybe just like that little fake out break above 7,700. Wouldn't mind playing that. Wouldn't mind playing that at all. How are we looking on the day? We're above both VWAPs. Looks like we popped above RTH VWAP, hit into it. Don't mind this trade at all. If you went long at 57, before when I was talking about 60, that was at 937. It's a little early. The chart wasn't as developed. If you took that similar trade, it just so by chance happens to be at 57, risk at 23. I don't mind that. You're above VWAP. It seemed to save itself multiple times, and you probably should be already out of that place somewhere above like 300, 305, 310, something like that. I would have already taken my money off, and it would have taken 3 minutes had I played it, but really try not to. I want more of the chart to develop. Obviously, the more chart that develops, there's a sweet spot because, of course, more time that passes, you have the chart developing more. But also, if it develops too much, that means you're in the midday chop in the later session. I deeply, deeply believe your best money-making opportunities are still in the first half of the day. And if you ask me, I think the sweet spot is from like 10 to 11:30. I think it's where it's that sweet spot of you have enough data to kind of go off of stuff, but yet there's still enough movement in the chart where like, okay, you might still get a piece of a nice trend. Now, is that going to be true for every single trading day? No, but I think on net, that's going to be like kind of your prime opportunity. I really do believe that. Hey, Matt, why don't you check the options positioning for QQQ? Sometimes there is divergence. Divergence of what? I checked the Q. What do you think the NASDAQ is? That's what NASDAQ is. The NASDAQ is going to be a much more traded product, but just so you know, combined signal of NDX and QQQ. I do. I guess I don't know how to answer it because I do check it. So there's that. Speaking of that, NASDAQ went up, taking a little bit of a hit right now. Mag 7 took a hit, now kind of going flat. And then the S&P 500 had a hero signal that apparently was a bit more bearish. I mean, the gamma map, because the gamma map is only for SPX, if you're talking about this. What time is it? Meta maybe finding a bottom. Nvidia tried to recover, seemingly got a little bit smacked there. All right, are we gonna bounce at this red to green test? What time is it? 9:51. All right.
Order filled.
I have to take a stab at it. We're gonna see. Did I do it right? Oh, I did do it right. Okay, so I did not do it right. I did do it right. Okay, so this is finally updating properly. You can see my position direction, how many I have, the average fill, and the current unrealized P&L for the entire account. So just in a different universe, if I was trading MNQ, NQ, and CL, the unrealized P&L would obviously be the entire thing. So unrealized P&L, I generally trade one thing at a time, so you're not going to really notice a difference there. But just to call it out that I did fix this, you guys in chat were kind of pointing it out over the past week. But Matt, because you switched from NQ to MNQ, it's showing us your unrealized, but the position and the average fill was not updating, and I had to go back to the chart. So I was able to fix that. This like little trade thing, I built this myself for Ninja, so I do appreciate you guys for calling me out. I know you were just trying to help me be the best me I could be. So I do appreciate that. So taking a stab here. Why am I taking a stab here? Because we just not only look at this, resistance, resistance. Like, look at all these wicks. We have this region of resistance. We just dipped into it. And the thought is maybe resistance turns into support. On top of that, we have the 1 minute 10 EMA. And on top of that, we have RTH VWAP. That's reasons to think that it might be support. Now, am I like guaranteeing that it's support? No. If I knew it was support, I would take all the money in the world and I would bet long. But the point is you could put all these puzzle pieces together, but there's still an aspect of variance because you don't know how other traders are going to trade. You don't know if Trump's going to say something on Truth Movement. You just don't know what you don't know. So you still have to behave in a manner that you have to respect that. So I went in half size. Why did I go in half size? Even though various things are aligning. And when I say various things are aligning, hang on, let me just move this up. I haven't figured out my profit target yet. I'm a little bit more concerned with the break above 320. I'm concerned with the break above 300 because then I can move my stop to break even. If we get above and hold above 317, if we can get above this region, because it is resistance, I'm basically saying I need this breakout of resistance. If we can take that out, I'm also trying to be mindful of the 10 a.m. potential reversal. I do want to get this stop to break even, ideally before 10, but we'll see what the market gives me. I went half size position because it's a little early. I do like, as I just already alluded to, I do like to wait till past 10 a.m. I find past 10, past 10:10, past 10:15, something like that. Basically, waiting past the first half hour, I seem to perform better. But you never know what you're going to get. You never know. The setup was there. I had to take it. I took the trade at 10:52, and it's literally just because resistance seemingly became support. And look at this. It's beautiful. Folks, I think I might have just hit the trade of the day. I think I might have just absolutely aced the trade of the day. All right, let me explain why. Here's a look at the Qs. Obviously, I'm trading NQ. They're the same thing. But here's a look at the Qs. We pop up. We go right to a region of resistance, which happens to be the closing value from yesterday. The region of resistance clearly establishes itself right here, as evident as could be. We get into it, get into it, get into it. Every time we get rejected, it's the same level of resistance, but buyers get more aggressive. You know they're getting more aggressive because the lows are getting higher. Think about what that means. If the buyers are buying here, then here, then here, and they're buying at a higher level each time, that is bullish aggression. Then, as I told you, you wait for the breakout. I do not chase the breakout. If you chase the breakout, congrats, you're just now break even. Instead, I wanted to be patient and wait for the pullback. And where did I want to look? Okay, not only do we have this upsloping trend line, not only do we have the previous close, not only do we have resistance turning into support, but just to make it a bit more fun, you have RTH VWAP. This is great. Granted, I guess you could have been a bit more aggressive at 57. My fill is at 78. I was just waiting a little bit, but honestly, somewhere in that region, and now we're up at the high of the day, I could make it a free trade. Boom. Bada bing, bada boom. All risk taken off the table, waited, patience. The only thing that doesn't make, I would say that was an A+ trade. The only thing that doesn't make it like an A++ trade is the time of the day. If this happened at 10:05, and the only reason I'm saying this is because you have the 30-minute Orbo already established. Sometimes there's those 10 a.m. reversals. What just happened, the trade that I happened to get into, everything about that makes it an A+ trade. I called it out kind of before the market opened and right at market open of exactly what I was looking for. And then it was happening. I was like, okay, I want to chase. Don't do that. Wait for it. I fully explained exactly what I was looking for. And then obviously you guys saw the execution and the reasoning in real time. And no matter how this trade plays out, it's an A+ trade. Regardless, at this point, I can't lose money because I put my stop to break even. So my scenarios here are either I make money or I'm just break even. And you know what I'm going to do is I'm going to move it up just to pay for commissions. But anyway, that's an A+ setup. And remember, you judge the quality of a trade, not off of the outcome. You judge it off of obviously the sizing and did you follow your system. So everything about this setup, I know there's positive expected value to be long here. If you look at this setup time and time again with proper risk management, that's going to be a profitable setup. Like it just is. If you play it properly time and time again. Now, that doesn't mean you're going to win every single one. When playing poker, you could be dealt pocket aces and still lose. It is possible. But everything about this, it's not an A++ setup, but it's an A+ setup. Without a doubt, this is an A+ setup. And I don't know. Maybe it's going to retest. I mean, it's running into resistance. I'm not necessarily the biggest fan of that. It kind of slightly overshot it. Let me look at what's going on. Yeah, it's trying to get out of this region. Trying. You know what I need to do? I need to kind of we have a couple new regions that we're paying attention to. We are paying attention to. Yeah. All right, cool. So maybe it could break this resistance. Maybe it can, maybe it can't. Remember, when it comes to support, you're looking for a potential bounce. There's a chance it breaks down. When it comes to resistance, maybe it's going to break out. Look at this region of resistance. Tested. Finally it broke, but there was a lot of tests that failed before. We're at resistance again. Right here, we ran up into it, got rejected, found support in the region of resistance, which turned to support. Then from there, we bounced again. Guess what? We ran into this region of resistance. It might break out. It might take a couple of tries. It might break down. It's just, remember, the way I view intraday trading is you do a combination. It's like, we talk about this in more detail in the Discord, by the way. If you want to trade with me, it's in the description of the video, goonietrading.com. Like, we talk about this stuff all the time, the breakdowns, and there's a lot of cool stuff coming. We have a team that's working on some really, really cool stuff. But just to give you kind of like a little bit of a taste of like my explanation, and like I said, if you're in the Discord or want to be in it, I'm more than happy to like explain this in much, much greater detail. There's not many things on an intraday basis that I think you need to consider to be profitable. Number one is price momentum. 1 minute trending up, 5 minute was bearish, broke out, 10 minute was bearish, broke out, 30 minute was bearish, broke out. Okay, that's for ES S&P 500. 1 minute on NQ is bullish, 5 minute is bullish, 10 minute is bullish, 30 minute, or the 10 and the 30 are both breaking out. The first thing I look at is momentum. Tell me which way the EMAs are pointing. Are they pointing up or down? And tell me, is price above or below those clouds on a relative basis? We don't need to overcomplicate it. Number one is price momentum. From there, I like to look at options momentum. Okay, S&P 500 was trending up, got hit by a hero alert, but it's recovering. Okay, so we have price momentum and we have options momentum. And for options momentum, we're using spot gamma to look at the delta flow. I can see the Nasdaq is trying to climb up, kind of flat. I could see the Mag 7 took a hit, but it's trying to climb up now. And the S&P 500 has clearly been climbing up. Also in the world of options, I consider big player positioning before, and I'm probably the major person in terms of influencers, which is the stupidest fucking term ever because I hate it. I'm probably the only one who's like really has this appreciation for options positioning and the market maker influences. And actually because of this, we're running at a negative gamma at 90. Did we hit 90? This could be a region of resistance. I need to watch this. It's good that we're actually talking about this right now in real time because before when I was like, oh, I'm interested in being a buyer, it was at the bottom of negative gamma. But now that we're at the top of negative gamma, this could be a wall. I need to watch this one closely. I don't have to watch it that closely because my stop's at break even. How do I want to play this? I could keep my risk at break even. I could move it to this recent low. The one bad move here is if I get wicked out, it might wick me out perfectly because it's an overshoot of 300 and then go from there. But if it just pops right off of 300, I might actually add to the position, add to the winner. All right, we're going to let this play out, but just to continue with the conversation. So we talked about price momentum. We talked about options momentum. We talked about options positioning. And then the final thing I would put together as structure. So you can look at the higher highs, higher lows, and also support and resistance. It's kind of all the same thing. So we had this high, we had this low, we had this high, we had this low, we had this high. Where's the next low? So I would say the geometry of the chart is the final thing that I want to consider. All of those together, I wouldn't say one is more important than the other. I would say those are all just the things I consider. They're all the pieces of the puzzle that I attempt to put together. And then one thing, and maybe this is a little bit more advanced, it looks confusing, but it's one of those things that like the more often you use it, the easier it gets. The final thing is just order flow. And I think this is a bit more advantageous if you're trying to scalp trade, but just seeing where potential trap buyers and sellers are. I can see a lot of buyers have been trying to get it above 310 and thus far to no avail. There's a lot of buying there. Hang on, let me do global. There was a lot of buying at 95. There was a lot of buying at 311. There was a lot of buying at 307, a lot of buying at 320, a lot of buying at 325. So there's a lot of buying right here. that thus far they have not gotten the follow through. On the first knock, buyers stepped in to save it at 270. That's kind of interesting. And then buying, this is when I got in at 951. I saw a little bit of a pop there. So like this is more on the order flow. And I would say this isn't completely necessary. Getting good at it is going to make your life easier for sure, just to kind of notice where all the big buyers and sellers are. So you could kind of put it in chart geometry, but sometimes you make highs and lows and there just like wasn't much traded there. So I still consider this to be incredibly important, but I don't want to overwhelm you and be like, okay, you need to know support, resistance, highs, lows, momentum, options positioning, and order flow. Those are the 7 things I look at. And at first you might be like, fuck, that's 7 things. Like, I don't even know one of these things. How do I put it all together? But it's one of those things that the learning curve when you're at the base of the mountain seems really steep. But then as you slowly put it together, by the time you get to the top of the mountain, you look back and you're like, oh, it really wasn't that bad. So I get that I listed, just 7 things to you. And this is like kind of the final thing that we've been talking more about, a little bit of my secret sauce of looking actively at the order flow. But that's kind of it, folks. Those are all the major things I consider for day trading, scalp trading, that type of a thing. Oddly enough, a lot of the things I just am investing, or a lot of them don't like, it's because I did this thing here. Let me make it smaller again. But I'm looking for the SPY because as we talked about regions of resistance, I can see the SPY delta flow is picking up, but I'm getting a little bit concerned. 90. We're running out of negative gamma. So we might be running into a wall of market makers up there. And look at region of resistance, resistance, 97. I might. All right, I'm going to use that just because I might be able to get another fill back down at 80. So I moved mine up. What is that low? That low is 96.50. We'll go to 95.50. Just want to guarantee, if this happens to be my one trade of the day, it's a green trade. Of course, I wanted this breakout to continue, but for all the reasons, okay, I just got knocked. For all the reasons I just listed, we're running into resistance. We're running, and then knowing my luck, that's going to be the wick low, and it can go. But just seeing this right here, look at it's just running into it ran into a wall, running into a wall. It's running into maybe this wall. So for me, when I'm green, why risk it? Why not just see maybe we can get another dip to down here to 60 and I can reload? And the difference this time around is I'm actually already up money. So it gives me a little bit of a buffer. So like I said, that wasn't an A++ trade, but it was an A+ trade. I mean, I deeply believe everything aligned. I was patient. I waited. It wasn't A++ because it wasn't this time 10:05, but maybe all that stuff that we just pointed out is going to become once again true at the right time. And we go from an A+ trade to an A++ trade. And I just want to say this again. I know I just said it, but I think it's really important for the audience to remember, the quality of a trade is not related to did you make money or not. If you continuously make high quality trades, yes, your P&L will on net go up, but you're looking at a series of trades. Looking at one individual trade, you can make the worst trade ever and still make money. You can make the best trade ever and still lose money. So just be really careful, I guess, resulting and assuming being green or red means good or bad decision. You can make the worst decisions ever and still make money. You can make the best decisions ever and lose money. It is possible. But where you're going to see that correlation play out in the long term is if you continually make good decisions, eventually you're going to see your market or your accounts go up, like quality P&L. And if you continually make bad decisions, yeah, you might have spots of like, oh, it spiked, but generally it'll be trending down. So just want to clarify that, but thus far, 1 for 1 on the day. I'm not trading this account because I didn't turn the trade copy on, and that's the one that I just took the 2K from. So I was waiting for the payout to be approved, and obviously I'm not trading the sim account. Mike Doors, thank you for teachings. Congrats on the totally real, not online kiddo. Shout out, Aaron. I appreciate that. I hope everyone's doing well. So we ran into resistance, and now, folks, I know I sound like a broken record on a dead horse, but now we're just seeing how it reacts in support. Now we're just seeing how it reacts. Would not mind a dip somewhere between 70 and 50, watching the mid 60s. SPY is still climbing up. Mag 7 got hit until about 941, 942. Since then, the Mag 7 is climbing up, and the NASDAQ is not. The NASDAQ, it's not really the problem child. This isn't horrible. It's just not really trending. It was a little up, a little down, a little up, a little down, a little up, a little down. So not really trending the best. Not really trending the best. Okay, VWAP, session VWAP is down here at 230. RTH VWAP is here at 271. And you have the 1 minute 50 EMA at 64, which is kind of why I like this region, somewhere between like 70. And I kind of like this whole region as a potential buy. And it's unfortunate because it's a wide region from 70 to 30. So you have a 40-point region. But if I can see a good entry structure in that region, I'll take it. I will definitely take it if I can see a good entry structure. Right, what do we have here? End poll. So we ran a poll, and the question was, what matters, macro or micro? And you guys were 58 to 42. 58 to 42. I thought there would be more micro supporters in here. Maybe that's just me. Maybe that's just me. You know what might really help this market? Let's get some tendies and tunes popping. Let's get some tendies and tunes. What is this? Mississippi Gamblers, bruh.
Back in late 21, I bought the top of every meme stock. Thought I was the smartest guy around.
Slaps.
Shots get wrecked by every fake. I'm moving liquidity hunt. Just push your luck that goes. You stop most likely at the exact bottom. We all just want to trade our plan without the nonsense they demand. Go close your puts, leave us alone. You won't need to stop out my positions, market makers. You won't need to leave my support levels alone. You won't need to stop out my positions, market makers. You won't need to leave me and my over leveraged homeboys alone. Every breakout fails and rips regardless. So don't think you know a thing about a thing. Tomorrow's candle does draw more lines. Leave us alone. We all just want to do our
We're now in support. The question is, what's going to happen from here? Remember, don't predict bounce or breakdown. Can I check gold? Looks pretty strong. Oil's taking a hit. Russell's up. Silver looks like it's flagging. We are right at RTH VWAP, this orange dash line. We also tagged the 1 minute 50 EMA. And the recent low here is 52. 50% of today's range is 245. Other VWAP is 230. This 270 to 230 region is pretty important. All right, let me make sure I'm on a proper playlist. I don't want to accidentally. New for summer. Oh, Margin Call Meltdown. This song is good. What are we seeing? Selling that got cracked. All right, we're coming right up to this low. And now, actually, we're cracking the low. And now we're coming up to this region of support. So this is a good example of why you don't just arbitrarily assume a level is going to hold. We just cracked it, and now we're in this next region. Patience. 10-12, little 10 a.m. reversal, but will we get the 10-15 reversal? We resistance, broke it, resistance, support, overshot, new region of resistance or established region of resistance, little shoulder, head, shoulder. This support we did not hold at all. We had support at 1050, the RTH VWAP, the 1 minute 50 EMA. They said nope, and we went right down to the next region of support and the 100 EMA. And the next VWAP is a little bit deeper here at 230, and we got as low as 235. But now we're at the 50.
Looks like a fucking mess. I was one bad trade from a margin called meltdown. Lost it all fast, now I'm spiraling down, 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 round. One dumb bet, now I'm out of the game. But I'll be back.
Is anyone planning on buying at this VWAP?
Order filled.
All right, I took a half-size position because I might have to scale into this, but I like this dip. We have some support. So I'm playing it a little bit smaller. It's not a full-size position because I recognize it might be a bit early, or it might be also straight up wrong. So I'd rather be wrong at half size. And then if I am right and we get this VWAP bounce, I can always average into full size. So just trying to be patient. We did rip through this one region, and then I'm seeing a little, I see support. I see the 100 EMA. I saw the wick, so I took the first shot here just in case it went. Obviously that didn't happen, but now I'm paying attention to just kind of this region as a whole. Do we pop out, and then can we get above 270, 280? Once again, half size. Cannot emphasize that enough. We are right at VWAP. 230. Right here. VWAP is 230. Point of control is 220. Let's see how this works. I'm about to YOLO my rent on SPX 0DT puts 7760. You want 0DT puts that are in the money? Does anyone else think it's going to bounce here? Or am I like not seeing it properly? SPX is taking a bit of a hit. Mag 7. Uh-oh. Something turned at 1006, 1007 there. Nasdaq also took a hit. 50-50. I don't disagree. Nvidia not looking the best. Meta not looking the best. I'm going to clean this chart up a little bit. All right, we're right in the region of support, but to be fair, the last support, we just cratered through it. It's trying to put up a fight here. Let's see how it plays out. Patience. All right, I'm worried about a rejection here, so I'm paying close attention to my position. I am long. I'm just break even now. I'm worried. I need it back above 270, 280. If it just turns here the way it's turning, that's not so good for me. That just could be an official lower high. Yeah, that's not good. It came up, double top right there, 1014, 1018. Not looking the best. Not at the panic level. Not at the level that I would consider it appropriate to cut. I'm not definitely wrong, but I would have much preferred a clear V, and I would have preferred these two bars to push 270. Well, fuck. I would have preferred it to push 400, 500 if possible, but...
My apartment looks like somebody left in the middle of a thought. There's a coffee cup from 3 days ago, still arguing that it's not. Everybody's posting wedding photos, golden hour matching smiles. I'm eating cereal over the sink, calling it a lifestyle. I swear I'm getting...
Come on, get going. Looking for this support to actually hold. The issue is it bounced off support and ran right into resistance, and now someone's smashing the book. Will it hold? Will it hold? Fives. So resistance, which turned into support, is now resistance again. Wick, wick, wick. But look at that. Resistance right back to support. So it's just, we have to just wait and see. What are we doing? It's not holding. No one can definitively know that. No one on this planet can definitively know if something's holding, breaking, fake out, not fake out. Like, just no one knows. Those type of comments, if you're legitimately trading off of that, of like you just have a gut feeling of a break or not, you're going to be right half the time and wrong half the time. Like, it really is a silly way to engage with the market. I guess I should also put out there, not this one. We're right at VWAP. Could be a VWAP bounce. We're right at VWAP now. It's based off your data. It's not. I can explain it later, but that's a very poor understanding of the mathematics of the market. It's not looking good, fam. I mean, all you could fairly say is it's at VWAP. No, like, if you're saying it's not looking good as in you're somehow trying to predict the next bar, folks, we've seen VWAP breakdowns before, which would not be good for me. But we've also seen VWAP bounces. We've seen these wick lows and these VWAP bounces like that. They all happen. So I guess if you're trying to be optimistic, it's easy to focus on the ones that work for you. If you're trying to be pessimistic, it's easy to focus on the ones that don't work for you. But once again, the odds are basically 50-50 here. All I can tell you is we're at VWAP, we're at a region of support, and I need to probably cut it if it doesn't bounce soon. I'm looking at 200. If we don't hold 200, that's my pain point. But we'll see. You don't know. All I can see, oh, you guys can't see this. I guess I'm also looking at this. I can see a wall of buyers at 200. We'll see how it goes. They might get cracked and we could go. That's a possibility. Or it could bounce. We recapture 230, 270, 280. 10 a.m. reversal on the dot. Today was very much a 10 a.m. reversal day. You're spot on. I still like his chances. Can I look at CRISPR Therapeutics? No, I cannot articulate how much I don't give a shit about CRISPR Therapeutics as I'm managing a trade actively. This was really bad. I could have taken the small loss at this bar right here when it popped up, got rejected, taken a small loss, I'm flat, and then if it keeps going, I could have always gotten back in. In hindsight, that was a better play. I was thinking, oh wait, it's still at support. So take a little bit of heat and maybe it pops, but obviously we just went to the bottom of this exact region. So now what I need to happen, hang on, that's not good. We're right at the bottom of support. We got smacked at VWAP again, didn't we? Yeah, right there. Wicked at VWAP. Do I just want to cut this now? I'm watching 200, obviously. Above my head, you can see on VWAP, there's buyers at 200. This is why I traded half size, without a doubt.
Everybody's got a system, everybody's got a course, everybody's posted.
Oh, it's still at 200. Does it crack or not? Or if it cracks, is it a fake out?
Mom says I should quit trading, get a normal job instead, but she doesn't understand the voices living in my head. Every ticker looks attractive when the market starts to run, and every loss becomes a comeback story waiting to be spun. I know better, yeah, I know better now, but
Not good. It's one thing, like my only fighting chance here is like it saves itself at 200. I don't want to test, does it save itself at 174? I just don't want to be involved at that level with my current positioning. Ooh, someone just, it tried to get back up, and I could see on order flow someone hit it pretty hard. Fuck, 190. All right. Buyers at 180. What are we doing at? Oh, I don't like this. It just happened so quick. I was looking to see if it tagged 200 again to dump it. It just never tagged 200 again. Jesus. Oh, how do I want to manage this? I want out. I just need to pick a realistic level to dump or a way to dump it. I was thinking a retest of 2 that failed. What happened was at 10, no, you could see right before 10, Nasdaq started to dive. Mag 7 started to dive. S&P started to dive at 10.04. So just the options trend, like really, really pivoted. Oh, I'm just looking for some sort of mean reversion. Even if I can dump it on a retest of this support, like even just dumping it in here would save me 30, 40 points. The 10 a.m. sold program was very real today. Very real today. 1 minute dove, 5 minute dove, 10 minute dove, 30 minute dove, 1 minute, 5 minute, 10 minute. Geez, everything's just turning course today. Wow, it got really rejected at that high. How much pain do I want to take? Do I just like mark it out right now? It's just a waterfall. This is not the region of support I wanted to be preying on at all. And this one got away from me. I'm awake before I worship. Watch the actions, not the sermon. History got receipts. I don't care who determines. I'm curious. Will it allow me that retest at 200? Just trying to minimize this loss. What's the loss? Thus far, nothing. It's unrealized. I'm still in the same position. Maybe some trapped sellers right here. Someone sold at 160 and it popped on them. But those guys, this 1025 was a dagger. Every cycle got a pretty slogan. Every rescue leave another lock broken. Every bail I write another blank token. Every promise sound amazing until spoken. So I never buy hope, I buy proof. Never buy smiles, I buy truth. Whether wars change the room, we gon' see. Who's gonna end it? Nobody gets it. I want to see it tag 200, and I'd prefer it battle it out at 220. I want to see another retest of the 50 and the 100 EMA. If it starts to turn there, I got to bail. Maybe this is just a double bottom bounce off the... We'll see. I did move my stop up to that low because I need, at a certain point, I should have called it a pain point, I guess, at like 197. I don't know. I hate playing the $100 just because so many people like have their orders there, but I probably should have had it at 190. So because it was right at the $100 rung, I didn't want to play it. So now my stop's at 156, 155. But like I said, first battle's 200. Then we're talking to 200 to 220, 200 to 230 is kind of a very important recovery zone. Is it just going to get straight up rejected? Come on. What do we see in flow? Did the flow stop? Not really. SPX, big dive, flattening out, but it quickly is turning. Mag 7, maybe a little bit of flattening out. NASDAQ, dude, this all really turned. NASDAQ turned just before 10. Mag 7 turned 5 minutes after 10. And the S&P 500 turned 4 minutes after 10. Ugh. We're running at a negative gamma, but SPX has a little bit more to go. Maybe like 665, I would say. Hang on. Interesting print just now. Maybe more trap sellers. Trap sellers at 1028, trap sellers at 1031. They're trapped unless we break 175, unless we break 160. So the longer we stay above those two levels, and it's also the value area low as of now, we might have some trapped ones. Obviously, it's relative to where price is. Trap, trap. Like I said, I did finally update my risk to a reasonable level. I just put it at that swing low. If it cracks, then I figure I'm screwed because it might be going to 100. But right now I'm giving myself maybe this shot of like the 200 to 220 test because I see 200. It was support. Now it's maybe it's resistance. Maybe it breaks. I don't know. But then I would love to see a VWAP retest because it's roughly the 50 EMA. It's roughly the 100 EMA. So like I said, 200 to 230 is pretty important to me. But it is resistance. And at resistance, you could get rejected, obviously. What's my worst case scenario? 900. I don't want to take a 900 point hit. I don't want to take a 900 point hit. I mean, at least try to fight it out at 200. Come on, man. Let's see. I want to... This was the dagger for me. When it broke, popped, instantly got smacked. This break at 209, the 1025 bar was when I was like, I should have maybe just thrown in the white towel on that one. It was... Whoever was engaging in the market was more than happy to smash it right at VWAP. Like, the break, the retest. And now I'm waiting for this battle at 200. It's probably more exciting to watch it here. And you can see the book map above my head, but we're just battling it out at 200. You have VWAP, you have POC. All right, maybe traps. We might have 3 groups of trap sellers: 178, 175, and 162. So if it stays above 180, that's probably what's giving it fuel to test this 200. I'm just worried that sellers might come back in at 200. Oh, I don't like that. Smacked right at 200. We wicked above 200. Come on, battle it out. Give me a shot. Just test VWAP, test POC. Come on, get like at least give me a sliver of excitement. A sliver. Give me that twinkle back in my eye that maybe this could work itself out. Oh. To be fair, if I was bearish right now, if I had a bearish position, I'd be pretty happy. I'd be like, okay, cool, smacked at 200. Putting myself in the shoes of the exact opposite position, I would like what I'm seeing, which means since I still have my bullish position, I'm not so stoked. Just to be fair, if you guys have a bearish position right now, obviously that rejection at VWAP, I thought it would just at least have one shot back above VWAP, and obviously that was the wrong play. The only thing I did right is I kept it at half size because I knew it was kind of a sketchy call out. All right, back into a region of resistance, 200 to 230. 200 to 230 is a big battle zone. Come on. Let's see 230. Right here. Point of control is 220, 225. But we have POC, we have VWAP, we have the 50 EMA, and we have the 100 EMA. This is the zone, folks. This is where I find out if I'm screwed or not. I don't know which way it goes. Of course, I'm hoping it goes in my favor. Duh. Nice job, Calvin. I sold my 0DT 766 put. Were you playing it on ES? Uh-oh. Buyers are maybe getting rejected right there at VWAP. Shit. All right, I need to be a bit smarter here and maybe update my line of where I could be wrong. So we're at VWAP, we're at the 50 EMA. If if it gets smacked at, like, I might. Okay, if I move my play up to 500, I'm up. That's not bad. I can manage that loss. Dude, is that the smart play, or am I just being like a little angsty? I just need to think. Do I want my risk to be 211? Basically, if it gets rejected at VWAP, should I just bail on it? It could just be a rejection. Come on, just break it. Make the decision easy. Don't take out these lows. Just go. Just pop it. Come on. Just get going. This is like the big test for me, where if it looks like it's getting rejected, I kind of have to dump it. My loss is now manageable. Come on, just bounce, bounce, bounce. Big green, big green. Big green. Come on, bounce. The old 1039 bounce. Come on, you could do it. Where are those buyers? Put those magnets on the chart. Let's go, buyers. Take it back up. Take it back up. Come on, buyers. Where are you? Where are you, buyers? You could do it. You could do it, buyers. I have faith. Take out 220. 220 is POC, point of control. It's the yellow line on the book map above. Okay, let's go. We're going over VWAP. Let's go. Let's go, baby. Let's go, baby. Let's go, baby. You could do it. I did temporarily move my risk up to 209, only risking 517, up 160 on the day. So that would mean my worst case scenario is a 350 loss. Come on, let's go. Take out this VWAP. I need it to hold above the 50 EMA, the 100 EMA, point of control, this VWAP. Next VWAP is also resistance. The old 1039 bounce. Tony knows about it. You guys might not know it, but Tony Montagna in chat, he is actually the pioneer of the 1039 bounce. He writes me handwritten letters all the time, and he's just going on. He's like, dude, I'm always playing that 1039 bounce. Tony, shout out to you. I hope it works out today. I hope for you, and I know it's your core strategy. You guys might not have met Tony, and if you haven't, say hi to Tony in chat, but he loves the 1039 bounce. Every single day, he's just ripping it at 1039. Studied and perfected over time. We all know about the 1039 bounce. Come on. No. Hold. Don't be the fake. This song is hitting a little too real right now. Hold VWAP. Hold VWAP. Hold VWAP. Hold VWAP for me. Okay, what's options flow? We're right. See, like, we're just at that pivot area. It was support. It was resistance, support. Now we're just at the top of it. The question, is it resistance? If it gets rejected and we take out 213, probably coming back down to 180, maybe 160, maybe 100. However, if it connect, like, look at just this whole chop area, it was support. Now it's resistance. If it gets going, then we're talking about 150, 160. It's just, it's an if-then statement. If we break this, you're going to the next area. If you break that, then you're dropping to the next area. And while you're in the area, you just kind of got to wait. Come on. Fuck. It's coming close to tagging me. It's running into sellers. Son of a bitch. It's getting really close to tagging me. Come on. Double bottom pop. Come on. Double bottom bounce. Hold this region. Hold it. Hold it. Having an issue at it's the VWAP battle. It's the POC battle. I got tagged. Okay, I managed it to the best that I could. I tried to give it a shot. I probably, on the initial hold, went too far. At one point, it was down like 900. 300, though not ideal, a $340 loss. It's manageable, for sure. So, didn't go the way I necessarily wanted it to. But at least it's manageable. I kept it all fully in control, and that's obviously the real name of the game here. But now maybe without a position, maybe I could see things a little bit more clearly. Could be worser. Oh, that's the thing about the market. It could always be worser. The bummer is it hit me on NQ because MNQ. This is one of those weird things where MNQ actually went lower than NQ. So that's a bit of a bummer for me. If I was trading NQ, it never would have wicked out. My stop was at 11, but you could see MNQ got down to 11. So that was just, it happens. SPY is now flat. Mag 7 took a big hit trying to recover. I know exactly how the story ends, but somehow I still place the bet. CEO changes bio to AI. Stock went up and nobody asked why. Revenue's dead, the balance sheet's cursed, but at least the press release sounds rehearsed. The Discord called it healthy consolidation. My account called it financial mutilation. Someone typed I'm a
Order filled. Order filled.
My broker knows me by my first name. It's probably not a good thing. Fuck. Did I just get wicked into that? I took that breakdown right here, this shelf. Fuck, I'm so dumb. Right here. All of these lows at 213 on that break, I took it and it just bounced right in my face. I figured shoulder, head, shoulder. I thought that was actually a really good entry. This 212 break and then targeting 200, maybe even 190. What the fuck? That sucks, dude. No, that was really unfortunate. I was trying to be patient. I was like, dude, there's a very evident shelf at 213. Wait for the break. It did. You heard the trade. And then the very next bar, it popped my face. Shit. What do I do? I did not think that at all. Like, I waited for the break. Son of a bitch. Do I just want to bail? Fuck. I'm going to give it a minute to see, but that's a bad beat. That's a bad beat. I took that short right there when it snapped it. Very next bar, it pops up, and now we're testing the top of this region. I'm going to give it that chance because it could just get rejected here. I'm going to watch it, but I'm going to dump it if it goes out.
I don't want to chance it going up to that 260.
Order filled.
Wicked out on half. Jesus, what am I doing? Now I'm just getting frustrated because that was such a bad beat. Do I just want to dump it? I mean, it turned. Like, a fake out breakdown is by definition bullish. I mean, I can't believe I got whipped into this. Fake out breakdown pops. I was willing to get into it because the overall trend was bearish. We're below the VWAPs. Options flow was down. Momentum was down. I thought it was with trend. So I was like, okay, a with trend failure. This pop failed, except that failed pop was apparently not a failure. And now my loss on this is ballooning. Not ideal. Not ideal. Do I just need to cut this? I'm going to give it a second because obviously support, like chop here. It could turn here. But that brings up the fair question. Unlike before, dude, this sucks because if I kept that very first one, I'd be actually getting really close. But I thought I was being smart and on this breakdown, getting out, be like, hey, man, that could have like right here. So I dumped it. I was like, all right, you got to get out. It just, you didn't get your shot. And just for that brutal fake out, brutal fucking fake out. But it happens. That's trading. You can't cry about it. No crying in the casino, folks. We're just in between the two VWAP, session VWAP and RTH. I can't believe this. If I held that first play, I'd be back to break even. It's just this bar right here, 1046. It just got me. I saw it sweep these lows. It looked like a shoulder head shoulder. Like I was looking at that and I was like, dude, this is coming back down. It happened. It's frustrating, but you can't get like it just, that's trading, folks. Like I honestly think I read it well. And in another universe, that's the puke. And we go to 200, maybe snap it. Like it just so happened that options trading decided to recover at like that exact moment.
Suit on TV says panic and hide, but panic's for fools on the losing side. I lit a smoke and slam.
Now we're back to like where I was before, where how to manage this half position.
While the bulls kick down the market door. Hear the bastards yell it's doom.
Dude, it's just fucking going. Jesus.
If the candle dips, we load the gun and fire that bastard.
It's not even, I'm watching this. I can't believe how this is playing out. Unfucking believable. Unbelievable. I can't chase it here. I can't punt it long because the chance of a pullback is real. So like chasing it, I don't want to necessarily spaz out and do like the wrong thing. I'm so dumbfounded that I got wicked out, try to play the new trend, and then the trend switched. This is the second time today that I like waited for a trend to establish, trying to play it, and this like within a minute or two, the trend just reversed on me. It's just so brutal. I mean, is this gonna have a pullback? Like, what are we doing? There's the pullback.
We're making green tonight, boys. Raise the roof with market noise. Drink it down till the screens go clean. Long live the lads who ride the green.
I still think it will pull back to 70 or 80. I don't know which one, 70 or 80 you're talking. 170, 180 or 270, 280. All right, maybe getting rejected at previous resistance right here. Also RTH VWAP. That's why I moved my risk, because if it goes past this, I'm just evidently wrong. Next watch is the 227, because it's roughly the 50 MA, it's roughly the 100. It's also other VWAP. Yeah. Okay. So I'm watching 230 at this point. If it snaps 230, I have a shot. If it does not snap 230, I in fact do not have a shot. But I'm at the point where I just need to stop this hemorrhaging. If I see a V shape here, I have to get out. And it's going to be a not fun loss. It's going to be a 30-point loss. But if there's a V shape, like when we see these V's, if I see a V right here, if this resistance is turning into support, I have to get out. What are we doing? Fuck, is this the V? Fuck. I just need to accept that I'm wrong if this pops here.
Order
I'm
filled.
wrong.
Order filled.
Higher low, yeah, I have to, because like, yes, of course it could reverse here and drop in my favor, but all I can go off of was what I'm being told in real time, and I see higher highs and higher lows. It's bouncing off the 50 MA, it's recovering VWAP. I just fuck. Don't revenge trade. No, that's why I did half size. I mean, it is a legit setup. Like before I said, if I see a V shape off of support, like you just got to do it. So just trying to lay down the white flag, admit that I'm wrong. I mean, I saw this wick above it, and like I said, it could fail here. Yes, at any moment you could have a lower high, but I had to make the decision at this moment in time. Higher high, higher low, higher high, higher low. The second I saw this higher low and it's recovering VWAP, maybe breaking out of resistance right here, maybe breaking out of, this might be better. Yeah, I mean, you just have these like kind of two overlapping regions, really. I just had to. I mean, fuck. And now I just, every time I'm doing this, it's just, I'm on the wrong side of it. What freaked me out was right here. This 1057 bar pops up, pulls back, saved itself at the 50 MA. It's at RTH VWAP, and it wicked up. Unfortunately for me, it's now settling there, so I need bullish follow through. But I had to pull the ripcord. I had to get out. You're doing exactly what I do right before I blow out my accounts. I guess I don't agree. Well, I don't know what happens when you blow out, but generally when I blow out, it's when I'm just like, I'm in a play and I'm mad it doesn't work. So then I just get out. Like I just hold it and hold it and hold it and hold it until my account blows out. I guess I just disagree, because like I'm sitting there saying, oh no, like the signals I'm now getting are the opposite of my trade. I gotta get out. So I guess I just fully disagree with what you're saying. I'm putting together the things that are saying, okay, this is starting to skew bullish, so get out of your bearish position. Take a walk and come back. I don't agree with that. I think there's times to take a walk if you are going against what the market is telling you. If right there, if I'm seeing higher lows, if I'm seeing a bounce off of VWAP and I'm still throwing on shorts, that's a good time to take a walk, because you're not admitting to yourself what is happening in the market. Like you're just like saying, no, it has to break my way. But I actually feel like, obviously, I'm not happy with how red I am, and I feel like I've gotten some bad beats because there was a fake out breakdown that now recovered. But I actually feel overall I'm pretty in control, because like I think a sign to me that I'm in control is I was in a short and I got out of it when I saw a legit signal. We care about you, Matt. You're still being like too emotional about it. Got stopped out, then got straight in. What's wrong with that? It's bad to get out and get straight back in if there's no signal. But my question to you is it bad trading if you have two signals back to back? Like, is that like why is that bad? I guess like, and of course, like we can all view the market differently, but from a person who cares about the statistics of the market, when a signal fires, a signal fires. It doesn't matter if it's 15 minutes after a trade or if it's 1 minute after a trade. If a signal fires, a signal fires. And for me, it's telling me that I'm being disciplined when the signal fired bullish and I was in a bearish position and I just had to admit I was wrong. That to me is saying, okay, you're still like in the game. You're still doing what you should be doing. I think it's actually kind of fucking stupid to think, no, just because you're in a trade, you're not allowed to get in another trade for a minute. I agree with that if a signal does not fire. If it does fire, maybe you should be in the trade. And I think that's really tough to discern when you're trading, is like, are you being tilted or not? But now that we're talking about it in real time, and I think this is actually a quality conversation, is like, be honest with yourself. Like, are you making a decision because you see a legit setup, or are you just mad that you're red? Are you chasing? Like, to me, like really evident signs, like really evident signs that like maybe you should take that walk, is you're trading too much size. All of a sudden you're trading whatever size and then you go bigger. And all of a sudden, instead of waiting for the pullbacks or something, you're now chasing the breakouts with size. That's where, like, that to me is the telltale sign. For me, I'm actually sizing down. I've been trading pretty much half size all... No. On one of them, I took full size and that cost me even more money. But all but one of my trades today has been half size. So I feel like my sizing's in check. In terms of the signal, I actually use the bullish signal to get out of my bearish position instead of just holding on to it and praying. I don't feel like I'm chasing the breakouts. I feel like I was waiting for retest. So like in my mental checklist, and right now, I mean, being honest with you guys, I have the opportunity to get out break even right now. Like I do, but like kind of looking at the things that I care about, I actually feel like I'm keeping it together. That's easier to say when you're very, very green on the day, for sure. But I think a sign of you being in phase is like in real time to critically think about your own thought process in the time. It's just that it gets emotionally draining, so you start to make bad decisions when you get it in trades back to back. Maybe you do. Like there are other people who can handle that perfectly well. There's days I can handle it perfectly well. There's days that I can't. But once again, just because you're emotionally, or maybe I should say psychologically strong or weak in a certain aspect of trading, that doesn't mean other traders are equally psychologically strong or weak in that aspect of trading. It always boils back down to, are you just being disciplined? You're just reacting. Ricky gets it. I'm reacting to the new chart developments in what I perceive to be in line with my system. That one trade, I'm going to have to review it. I guess it all happened so quickly. I don't know why my one trade was full size and the other ones weren't. That one is maybe the fairest call out for being like, Matt, that was a little tilted. But once again, I'm currently back down to half size. This is more calm and composed, Matt, compared to the past where we saw him size up. To me, that sizing is like a telltale sign. When you're having a bad day and you're like, fuck, I need to make it back. So you start trading double, triple the size, and you start trading triple the size with no system. And it's like really chasey. Like you're chasing every breakout, you're chasing every breakdown, hoping you get into that trend. I guess right now in my own head, I feel like a lot more calm about it. I don't know if that means I'm going to make money or not, because right now we're still trying to hold whatever VWAP, and I don't know if that will or won't work, but we'll see. I mean, as a person in my own head who's been very tilted before, this to me doesn't feel tilted at all. Like I said, with the caveat of I need to see why I did that one trade up full size. I need to review that, but outside of that, I guess I'm voicing frustration that I'm trying to play the trends and the trends reverse twice on me. But beyond that, like this trade, like objectively, if I had no position right now, I would think that it's bullish. But right now we're at RTH VWAP. Yeah, I'm just trying to hold this RTH VWAP. But unfortunately, I gave back just over half my buffer. If I keep my size what it currently is, I need 375. That's my current break even all the way up here. Is it possible? Yeah, we'd have to go 100 points. I might add to this winner, but I'm just trying to get on the right side of the trend. And right now, maybe it will be bullish. I mean, fake out breakdown, high or low. This is what screwed me right here. This 1046 is what knocked me out of my bullish position that I was green back here. I bought right here. I went long at 1015. It came down, dipped. I tried to buy that dip, held through this, went up. I was like, uh-oh, low or high. Let's see where the next low is. I got wicked out at 1046. And not only did that knock me out of my long, this bar right here where my cursor is, it pushed me short. Then I had to admit I was wrong on the short. This pop up, this pullback, another higher low. I got out at 1057 because it's another higher low. I feel like I'm laying down my sword win wrong pretty evidently. This is what, you know what it was? Is at 1046, I had the wrong orders. That's why it was full size. That was a full size short at 1046, but it's because I had two pending orders that messed up. I had one to get out of the long and one to go short. So that's why. So it's still on me. Obviously, I placed the orders. I'm not blaming anyone else, but I was trying to remember why that was a full size short instead of half size, because every other trade today has been a half size trade. Instead of trading 10 MNQ, I've been trading 5. But now, I mean, what I would like to do. So right now I'm risking 500, which if that hits, I'm down 1700. So I'm screwed. I could reasonably move my risk up to 225. We'll see. I mean, I don't like this because there's a real chance of a rejection somewhere between 320 and 340, 300 to 340. And I need 375 to be break even. Not like he's going. It's not like he's going 3/4 NQ. Yeah, I mean, you could argue, but Matt, after your loss, why not size down? And there's probably good sentiment to that. There probably is. It's like, okay, Matt, you lost on the 5, why not drop it to 3? If you lose on the 3, why not drop it to 1? Like, give yourself, like, that's fair. But I think the conversation is wildly different than keeping the same side versus sizing up. Sizing up is where you, in my history of trading, is where like it's kind of getting suspect and it's probably not going that well for you. And right now we overshot that. I don't want to go break even. It'd be one thing if my fill was at 54. I could go break even there. I kind of have to keep it here. I have to keep this $200 of risk. We'll see. I mean, where are we? We're right at... We hit where we hit in minute 2 of the day at 280. What does the gamma look like? I think we're bouncing right back through. Oh, okay. So the Nasdaq is picking up. So I was long. Nasdaq turned on me, got screwed, tried to go short, got like, look at, you can see up, down, up. Mag 7, same thing. Up, down, up. And then SPX, look at double flow. Like, this is a tough day. I mean, look at up, got hit on the upturn with a hero alert, kept going up, turned up, had another hero alert, kind of got hit, and now we're getting the follow through. It's just, it's a double switch day. It's a tough day. And just because it's a tough day, that does not excuse me. I could have traded it better for sure. I just unfortunately did not. Unfortunately, like, I mean, even look at this, like pop, pullback, pop. So the SPY had an issue at 1053 at the closing value, finally went green, and now look where the Qs are, their own closing value. Meta attempting to recover. I mean, look at this whipsaw. Dump, pop, dump. Now a recovery. How big is the recovery going to be? Is it going to get rejected and turn again? Or do we just keep going? That's what you don't know. And I guess my own self-criticism would have been a little bit better with that initial stop management on the break of VWAP. But here we are. And now I'm in a trade. I'm slightly green. If it goes and we have a breakout of the intraday high, I have a real shot of going back green on the day. Right now it's half size. If I see an opportunity to add to my position wall green and get to stop on the first position to be break even, I'll take to it. I don't mind adding to this winner if the setup is there. Fuck. That's not good. All right, we tried to break out of resistance, the exact resistance we tried to break out between 931 and 942. So the 10 minutes of resistance this morning, we did finally break it at 943. Obviously, that eventually ended up failing, but we're right back in that exact same region. So I would love that pop. And if we get that pop, I would say 300 to 330 is back in play if we can actually get out of this. All right, I took all risk off the table on this trade. I put the stop to break even, and I did it because I'm thinking, do I want to add? Do I want to add to this slight winner? And I only want to add if my first position is already riskless, because if you add, then you're still just taking on no additional risk. I think we could hit 29,400 if it pops. I mean, anything's possible. All right, so I'm taking on no risk. All right.
Order filled.
We're adding. I need to split these orders up. So I'm at full size. One of them is at break even. So if this one gets knocked out, I just want to be clear, it's knocked out at break even. It didn't cost me anything. Wait, what is this? Oh, Kohrs. So once again, if this gets knocked at 57, that was the initial fill. So it's just out for the
Order
freebie.
filled.
Okay, so it got knocked out, unfortunately. I try to add to the position, but I want to be clear. I took on no additional risk. Like, that is very, very important. So I added a new position, higher fill, not the best bet. But just trying to scale in, scale out. And unfortunately, it's just getting fucking knocked again. All right, here we are. Oh, I should have known that. Damn, I didn't look at this chart. Right back to this one. Obviously, if it pops off of this, I will add again. And guess what? I'm going to do the same thing. Reduce the risk, if not close out the risk on the first one, and then just focus on the second one. But for me, I would first want to see if it holds the 1 minute 50 EMA and the RTH VWAP. But that's kind of the beauty of being able to scale in and scale out, is you can handle those scales differently. So for me, I was only willing to add if I reduced the risk on, or I literally nulled out the risk on the first one. Is this the bounce? All right, I need to mark this because if I do add, I need to keep track of these. But we're right at this VWAP. Is it going to bounce? I would love a VWAP bounce here. All right, this bar is going to be closed. Maybe it's not. Are we going to get that V shape right here? It's pressing. All right, we're at the 50 EMA. Our buyer's going to step in. I don't see buyers or sellers on the order flow yet. You can check the book map above my head. I'm not seeing any crazy orders quite yet. So, I mean, we're in a key zone. There's another key zone down here at 230. Are any buyers going to step in at this? All right, we're at the 50, the 100, previous support. We're going to see how this one goes. Holy shit. This is a tough day. This is, I mean, I'm having a really tough day. I hope you guys are somehow doing better. But these, like, every time it seems like we finally get going in one direction and have actual momentum. I don't get it. We're not. I don't get it. I don't get it. I hope you guys are having a much better day than I am. This is a fucking horrible chop fest. What are we at with momentum? 1 minute was bullish, bearish. 5 minute trying to hold bullish. 10 minute trying to hold bullish. 30 minute trying. 1 minute's cracking. 5's testing. 10's testing. Like, look at this 30. It's just, I guess it's just like the awkward. I don't know. All right, let me pause this for a second. I almost want to walk away because like I don't want to get into the position. I could leave this on, but I don't want to like add and be stupid. I want to do the whatever I can to try to save these. I just don't want to be a dipshit about it. I don't want to get tilted is I guess what I'm thinking. And all I can see, big pop, big drop, big pop, NQ overshot, SPY undershot. There's a big pop, but then it just proved to be a lower high. Are we just putting in a higher low right now? Like this is just not the environment for my trading style. So I'm going to see if I could just manage what I'm currently in, but I feel like I just almost need to call it for any realistic shot of saving my accounts. Cause I got too beat up by the time I was like, oh, we're breaking down. I wanted to go short. Then it popped. Like it's just, this is whipsaw for me. So as you guys were properly alluding to before, I think the smartest move for me is just to maybe chill and just manage what I currently have and see if I could get out for like break even or something. But this is, like I said, I'm finding the environment to be very difficult. I hope for you guys you're agreeing. I hope you guys are finding it far easier than I am, but just kind of knowing myself, I don't want to keep trying to press the metal here because you just don't know. But I would very much love for it to save here. Support 150. I would love this recovery. Solid sign is recovery of 260. That's a solid sign. 250s RTA. So maybe one VWAP bounce. You don't want it to get rejected at 250. So I think a push and a hold at 260 gives us a real shot at 300. But that's a big if because today has not been playing out the best by any means. Okay. Yeah, I need to just manage the one I'm in and not like overstay my welcome here. I'm attempting to not do something stupid. So that's what I have for you guys. Remember, shout out to MFF. Use that code Goonie. Instead of 20% off with code Goonie, you actually get 50% off. A little bit of a specialty offer there. End of day drawdown, daily payouts, 90-20 split. Pretty sick deal. That's what I have for you. Remember, Nvidia is reporting after the market closes today. Market closes at 4 p.m. Nvidia, which has an expected 5% move, whether up or down, is going to be dropping those numbers at 4:20, and then their earnings call is at 5 or 5:30, just so everyone knows. That's what I have for you. I hope you guys crush it. I'm going to hope that we stop dipping here, but if we keep dipping, I just need to call it and ideally live to fight another day. We'll see how it goes. Have a great Wednesday, and I'll catch you guys on the flippity flip. Peace.